Will, do you want to open the meetings?
Sure. Thank you, Chairman. To begin, we note the following. We are joined by Jesse Olzak, representing the Director of the Budget, and I believe Eric Mostert, apologies, representing the Commissioner of Taxation and Finance. We're also joined by David Gonzalez, I believe. Is that Mr. Gonzalez, are you there?
Yes, that's correct. Good morning, everybody.
And B, I'll give you a second, representing the Secretary of State, participating via video conference from the Division of the Budget's Conference Center at the Capitol Building, room 131 in Albany. We also joined by B. Gonzalez, participating via video conference from HDR's office in Syracuse at 620 West Erie Boulevard, Suite 312. And we are joined by Hope Watkins and Andrew Sanfilippo, participating via video conference from HDR's office in Buffalo at Electric Tower, 535 Washington Street, Suite 105. In accordance with the open meetings law, notice of our locations has been made public, and the public has the right to attend and observe the proceedings for those locations. We will now do a roll call for each of the meetings and use the votes as items are considered unless the board member indicates an intent to vote differently or a need to recuse. To open the meetings of the New York State Housing Finance Agency, the Affordable Housing Corporation, and the Housing Trust Fund Corporation, I ask for motions and seconds to call to order, consider each agenda item, and later adjourn these meetings.
So moved.
Second. And now ask for individual votes from members of the HFA board, the AHC board, and the HTFC board, starting with Chairman Weiss.
Aye.
Commissioner Visnauskas.
Aye.
Mr. Olzak.
Aye.
Ms. Gonzalez.
Here.
Mr. McIntyre is not with us currently. Ms. McEwen. And Ms. Young-Watkins.
Aye.
Thank you. To open the meeting of the HFA Finance and Program Committee, I ask for motions and seconds to call to order, consider each agenda item, and later adjourn the meeting.
So moved.
A second. And to open the meetings of the HFA Audit Committee, the AHC Audit Committee, the HTFC Audit Committee, the HFA Governance Committee, the AHC Governance Committee, and the HTFC Governance Committee, I ask for motions and seconds to call to order, consider each agenda item, and later adjourn these meetings.
So moved.
For the individual votes of each committee member, we'll accept the previous vote. These meetings are officially open. To open the meetings of the State of New York Municipal Bond Bank Agency and the Tobacco Settlement Financing Corporation, I ask for motions and seconds to call to order, consider each agenda item, and later adjourn these meetings.
So moved.
Second.
I'll now ask for individual votes from each member of the MBBA board and the TSFC board, starting with Chairman White.
Aye.
Mr. Olzak.
Aye.
Mr. Gonzalez.
Aye.
Mr. Sanfilippo.
Aye.
To open the meetings of the MBBA Audit Committee and the TSFC Audit Committee, I ask for motions and seconds to call to order, consider each agenda item, and later adjourn these meetings.
So moved.
So moved.
Second. And to open the meetings of the MBBA Governance Committee and the TSFC Governance Committee, I ask for motions and seconds to call to order, consider each agenda item, and later adjourn these meetings.
So moved.
For the individual votes of each committee member, we'll accept the previous vote. These meetings are officially open. I want to note for the record that we had planned to meet as the State of New York Mortgage Agency as well this morning. We currently have an absence of a quorum of directors of SONYMA, and we expect to open the meeting of the State of New York Mortgage Agency later in the day when we establish a quorum of SONYMA directors. Our plan is to go through the agenda as presented, and then the SONYMA board will separately consider any items that also include SONYMA when we establish a quorum of SONYMA directors. Also want to note for the record that we're now joined by Mr. McIntyre for HFA, AHC, and HTFC. Thank you, Mr. Chairman.
Great. Thank you, Will. Good morning.
Good morning.
Good morning, everyone. I'll turn it over to the Commissioner for her report.
Thank you. Good morning, everybody, and apologies for the scheduling sort of complications, but happy to be with you all today, especially after not seeing folks last month. We have a pretty packed agenda today with our auditor and audit materials coming before the board. I was just going to give two updates on things sort of broader than that. We are still in the state budget season, despite it being April 8th. But we continue to support the governor and her team, including Jesse and DOB, on advancing the governor's affordability agenda. There's lots of conversations and discussions going on in the different aspects of the budget, and we look forward to that wrapping up over the course of the next, whatever everyone's crystal ball thinks it will get finished, but over the next couple of weeks, and are, excited with the, as I mentioned back in February, with the different policies and budget items that are in talks during this budget season as they relate to housing. So more to come on that. I think when we come back in May, for sure, the budget will be done, and we'll update on things that have changed and presumably the capital that will have been approved that will come to the agency for housing. Second to that, on the federal front, the president released sort of what's called the skinny budget for the federal government, which includes HUD. A couple notable things, the sort of Section 8 budget was held intact. There had been discussions last year about sort of block granting Section 8. That did not present itself in the budget, which is good. On the downside, there's about a 13% reduction in the overall HUD budget, which includes total elimination of home and total elimination of CDBG, two programs that are very important to the state of New York and to the agency and to communities around the state where we are sort of the conduit for those funds. The president's budget isn't often what gets passed as the budget, so we will just keep an eye on that. But I just sort of wanted to note that happened. The second thing that's happening at the federal level is there was the passage by the House of the Housing for the 21st Century Act, and then the Senate has the Road to Housing Act, and so the two houses are working to reconcile those two things, which is positive. There are many good provisions for housing in those two bills. They definitely represent sort of a structural shift from kind of sort of expanding subsidy programs and more towards production-driven housing policy. But there's, as I said, sort of lots in there that would help us do our work. So we'll continue to, we'll see if getting that passed in 2026 is plausible. We don't know, but as that continues to get negotiated out, we'll provide an update. And lastly, there's a lot of great stuff on the agenda today. We have our the first of our move-in, our manufactured housing awards. We have some land bank awards, a lot of work on funding for heat pumps, which will continue to come to the board throughout this year. So some good stuff in addition to the audited financials. So with that, I'll turn it back to you, Steve.
Great, thank you. Okay, item 2, the meeting minutes will be deemed approved absent any objections or corrections. Item 3, financial statements for the fiscal year ending October 31, 2025. And for this presentation, we will be joined by Ted Podest, Sonia Kinkle, Daryl Johnson, Mark Price, Darrell Ford, Mike Friedman, and the folks from Clifton Larson and Allen, our new auditors. Good morning.
Good morning. Good morning. Just to make sure, we are not going to handle the SONYMA right now. We'll do that later in the day, right?
Yeah.
Thank you. So within the presentation, I'll just go through HFA, MBBA, and TSFC.
Correct. Thank you.
All right. I'm going to kick it off with just the general takeaways from finance. Can everyone hear me?
Yeah.
Okay, good.
Yes. Are we projecting a PowerPoint that you all have in front of you, but maybe, right? Are you starting with the PowerPoint?
Yes.
Okay. Do we, I think it's maybe on, is it on the, where's that? Are we projecting the PowerPoint or is it on the laptops?
I don't know. Who's projecting it? I don't.
Or do you want folks just to talk to it? What do you want to?
Yeah,
You can just talk to it. That's fine.
Perfect.
it should be in the supplemental
Do you have it on here?
materials, yeah.
It's in the materials, right?
It should be.
Which,
You go to number 3 and right in the supplemental, April 8th supplemental board book.
Okay.
Number 3. Follow along.
Supplemental, okay.
okay. Resolutions, board book updated, supplemental board book, yes. Is it on a certain?
If you go to
Page 20.
Yeah, go to item 3.
Okay, sorry, I don't mean to be the problem.
It's okay.
Sorry,
All right,
go ahead.
on page 1, I'm going to take you through the financial statement takeaways. HFA continues to have a positive impact on New York State's affordable housing production. HFA's net position increased by $123 million. There's total outstanding bonds of $18.6 billion, $1.3 billion of new bonds issued, $16.9 billion of mortgage loan receivables. And you can see that that's $300 million increase from full year 24, and $85 million of fees collected, $9 million increase from full year 24. On page 2, I'm going to skip the SONYMA financial because we'll do that in the afternoon. MBBA and TSFC. MBBA's increase its net position decreased by approximately $173,000. It's generally attributable to the general expenses. 17 million of outstanding bonds, 10 million decrease from full year 24, no new bonds issued, and 18,000 fees collected, 21,000 decrease from full year 24. For TSFC, the TSR payments this year of 298 million with general expenses of 188,000 and a transfer to New York State of 97 million. No excess funds remain with the agency. There are no outstanding bonds. TSR payments continue to be due and payable to the state. Sorry. Perfect. All right. If you have any questions on that, let me know. Otherwise, our auditors, Clifton Larson Allen, will take you through more details after we're done. Mark's going to take us through the municipal bond market overview.
Morning.
Good morning, everybody. So I'm just going to go through what's happened in the municipal bond market, which is the market in which we issue our debt, which is sort of the engine of a lot of what we do here. So in the municipal bond market in 2025, issuance increased by over 5% year over year, following a decrease in rates. And in terms of tax-exempt issuance, non-AMT tax-exempt issuance was up 7.5%, AMT issuance by 4%, and taxable issuance actually decreased by 20%. In terms of the interest rate environment, if we look at the 10-year Treasury as a proxy for overall bond rates, you'll see that the 10-year Treasury decreased by 39 basis points over the year, and rates at year end were 61 basis points below the max rate in the year. So overall, it was a very favorable rate environment compared to recent years, but we didn't see the big decline in rates that I think everybody had hoped. Turning specifically to the housing bond market, single-family issuance was essentially the same over the year, while multifamily issuance increased a substantial amount by 18.3%. Combined housing municipal bond issuance had increased 7% over the year. Now turning to more specifically our activity in the bond market on a combined basis, HCR entities, meaning SONYMA and HFA, combined, we were the #1 housing bond issuer in the market in 2025. And so our combined bond issuance comprised 7% of the overall housing bond market, and we've been a top 3 issuer for the last 3 calendar years. And if you look at the charts on the right, you'll see the substantial increase over fiscal year 2024 as well as calendar year 2024 for our issuance. And if you look at the set of graphs on the bottom to the right, you'll see that was mainly driven by refinancing activity, and that refinancing activity was for 80/20 transactions. So not new issuance per se drove the increase, but really it was that refinancing activity on the HFA side. Just a couple of things about our bond program accomplishments. The Affordable Housing Revenue Bond Program, which is the workhorse bond program for HFA. It maintained a stable rating at AA2 from Moody's. That was based on strong credit support, significant pledge funds, and a strong asset management record. And we continue to issue sustainability bonds, which has a following in the bond space for investors who deem themselves impact investors. And so the product that we sell is actually quite attractive to them. We were the #2 multifamily housing issuer. We did $2.5 billion of bonds over the year. Again, most of that was refinancing. We'll talk about that later. And we optimize our volume cap usage by recycling almost 500 million of bonds. We continue to have a very fruitful relationship with HTC, sharing recycling capacity. We shared a lot of our recycling capacity that would have otherwise expired with them, and we hope to keep that relationship going. Of course, moving to the 25% test, having a very long-standing recycling program will be helpful when we're looking for what we call gap filler in capital stacks when doing new projects. On the SONYMA side, the homeowner mortgage revenue bond program maintained a rating of AA1 for Moody's. So healthy balance sheet, good cash flow projections, good loan portfolio performance, and of course supported by a little known insurer called the Mortgage Insurance Fund. So we continue to issue social bonds for SONYMA, and we preserve some volume cap by doing what's called replacement refunding. So basically taking tax exempt volume from bonds that were paid off, and then we could redeploy that. So those were the accomplishments there. Before moving on to the next section, happy to take any questions.
Just a quick question, Mark. If you flip back to the page that has the production for the year, and I'm assuming you don't have this at your fingertips, but it'd be interesting to know, despite the increase in bond issuance, how many projects and how many units that produced?
Yeah, so we have a section on that.
Oh, you do? Okay, great.
Yes.
Thank you.
So did we want to skip anything in the
No, I think
interest
keep
of time?
going, and we have,
Okay.
oh wait, you mean to go to Steve's question?
No.
Oh,
Don't.
we'll come back to
Okay.
Steve's
All
question,
right.
yeah.
So moving on to liquidity and swaps. In order to manage our debt portfolio, we sometimes use variable rate debt as a way to lower interest rates. So one of the things about using variable rate debt, where variable rate debt tends to come with lower interest rates, the nature of variable rate debt, given that the interest rates are floating, there is risk management that we have to be mindful of. And so we manage that risk in a couple of ways. A lot of our variable rate debt is supported by what we call liquidity providers, which are banks that stand by to purchase bonds if a remarketing of those bonds, and the remarketings usually take place on a weekly basis or a daily basis. If there is a quote unquote failed remarketing, we have these banks standing by to take those bonds in, and so that manages that particular risk. So what we try to do is make sure we have a diversity of liquidity providers, and you can see on the chart on the left that we have 4 different liquidity providers for our HFA debt. No provider is more than 34% of the overall portfolio, which is about 230 million. Of course, the other way to manage a variable rate debt risk is to use interest rate exchange agreements or swaps to try to fix out that exposure. And so of the 233 million or 234 million of variable rate bonds that we have outstanding for HFA, 219 million is swapped. And we have 3 providers there. The provider with the highest exposure, or the exposure we have, the provider to whom we have the highest exposure is Wells Fargo at 39%, but still a very manageable risk. And you'll see all of our providers are highly rated. Turning to the next page for SONYMA, similar story there. We use a little bit more variable rate debt on the SONYMA side. We have $525 million variable rate debt outstanding, $479 million of which is swapped. Liquidity providers, again, diverse, and swap providers as well. And so, as I mentioned, the reason why we use variable rate debt in our portfolios is because many times that floating rate debt allows us to achieve a lower interest rate than we otherwise would be able to using fixed rate instruments. And so on slide 10, this chart shows the annual benefit that we get from having used interest rate swaps. And you'll see for SONYMA, it's about $50 million a year in interest rate savings, and for HFA, it's about $10 million a year. And those relative amounts are relative to the amount of variable rate debt that we have outstanding. Before moving on to the next section, any questions?
Thanks, Mark.
Okay, so I'm going to go through the just do an overview of our bond program. So HFA's Affordable Rental Housing Program is really a workhorse of funding and financing affordable housing projects. And so the bonds that we issue for HFA, they fund first mortgage project loans, and we typically do some volume cap bonds. So those are tax exempt bonds. Those bonds we issue those to be able to generate 4% tax credits, and we at times issue taxable bonds, and I mentioned recycled bonds already. So those are the two types of bonds, but those bond proceeds go to fund first mortgages that we make into projects, and those projects can be new construction, which includes adaptive reuse and preservation. So for the affordable housing program, as I mentioned before, the workhorse bond program that we use is the Affordable Housing Revenue Bond indenture. And that indenture was first started back in 2007, and it has grown substantially over time. We currently have $7 billion of bonds that are outstanding under that indenture, and that keeps growing. And the great thing about the growth in that, I think a lot of people will see a $7 billion debt number, and that seems somewhat foreboding, but under this program, all the loans that we make, we receive servicing fees on those loans, and we are allowed via IRS rules to earn what's called a spread. So the interest rate that we pay on those bonds is lower than the mortgage rate that we receive on the mortgages that were funded by those bonds. So as this program grows, our spread income grows, servicing fees grow, and so it really helps us manage our portfolio of projects, be able to support projects in a substantial way. So on...
What are the numbers on the top of those?
Just the two to the right, or all of them?
No, the numbers on the top of the chart.
Each bar.
Oh, yeah. So as you'll remember, we did issue some personal income tax bonds, and so this is actually, so this is showing, it says AHRB, but that's just showing the small amount of the personal income tax.
I think she means all the numbers across all of them. Sorry.
It grows from 15, 17 all the way up.
Yeah. So because it's hard to read the bars, it's just telling you the amount.
Okay.
And so each one of those is in millions. So the 15, 17 is saying that we have 1.5 billion in loans that
Got it.
as of that year.
And you'll be able to, later in the presentation, I'll talk about how many units this represents?
Yes.
Okay.
Getting there quickly.
Because you see dollars going up, I'm wondering if you're seeing units go up too.
Absolutely. That is why we're here. So if we turn to page 13, so our project growth as funded by this portfolio. So as of fiscal year end 2025, 66,718 total units are in the portfolio. And if we look at the breakdown, 55,000 of those are already in perm phase, so they've already converted, and just under 14,000 are in construction, and those units are within 413 projects. And so the graph on the bottom shows the growth in that unit count over the same period that we were showing the growth in the debt that's outstanding.
But that does say that in 2022, for example, the number of units gone into construction though is trending down, to your point, from 16,000 peak in 2022 down to 13,000
Yep.
in 2025.
Yeah, you'll see it later on. You'll see also that reflected in the unit, in the deal count and stuff also. We had a banner
Same thing
year.
with transactions is dropped. Yeah, exactly.
Yeah.
By almost 30%.
Costs are going up. Deals are getting more complicated.
Yes. And so you see the project count on the bottom right as well. So if we go to page 14, just overview of the overall bond program. So we mentioned AHRB has $7 billion outstanding. We have a total of $18.6 billion of bonds outstanding for HFA, and the amount above that $7 billion is mainly bonds that were issued for 80/20 projects, so $10.9 billion outstanding there, and we already mentioned the small amount of personal income tax bonds that have been issued. So I think sometimes it seems like there may be some sort of discrepancy, or we are not in a good net position when we say 18.6 billion of bonds outstanding, but 16.9 billion of mortgages. To be clear, the 16.9 billion of mortgages includes only those amounts that have been drawn on construction funds. So there are money sitting in construction financing accounts, and so the 4.2 billion of cash and investments above the 16.9 billion of mortgages accounts for some of that difference, but also wealth has been built up in the indenture as well in terms of different reserves. So our net position remains strong. And then quickly on page 15, we have, as mentioned, we have 11 billion of bonds in our 80/20 bond portfolio. The mortgages that were funded by those bonds, we continue to receive servicing fees on that. And as mentioned before, there was a lot of activity in the last fiscal year, 1.3 billion of refinancings. We typically get a fee to support those refinancing processes. And so we've earned 9 million in transaction fees over the year. And by doing those refinancings, those mortgages stay in our portfolio, and we continue to receive servicing fees on those. And so by doing this activity, we were able to maintain 4 million in annual fees, and those earnings can be used for a variety of purposes, including supporting operating expenses for the agency. Any questions on that?
Mark, we spoke once before a while back about the banks that we do business with. Is that just refresh my recollection in terms of the timing of our agreement and our an RFP going out?
Oh, sure. So in January of 2022, this body approved a panel of bond underwriters. At the time, approved 11 qualified senior managers, and I'm trying to remember the number. It might be something like 23 co-managers. That resolution has an expiration of 5 years. It didn't give an exact date, but it just said 5 years from the adoption of that resolution. So January of this coming year is when that pool will expire. And we have been in discussions with procurement about doing an RFP to renew or actually select a new pool.
Great. Okay, thanks.
Okay. The project's overview. Oh, just in a matter of time, I'll go over this. So we just wanted to show sort of this is a map that was generated by our good folks in ORSA, and this shows all the different units that were financed in 2025 and where in the state that those units were located. So you'll see upstate, downstate, north, south, east, west. So a lot of activity all over the state. Financed 4,600 units in 22 different projects. If we turn to page 17, you'll see the units financed by fiscal year and where we are. So the 4,600 projects that I mentioned in 2025, you see that in the top chart on the left. And you see that as being an increase from 2024. The number of projects financed, similar number of projects from the prior year, but more units. And then you see the project composition. So the majority, new construction, 55%, but also 18% in adaptive reuse and 27% in preservation. Any questions?
I think we're going to pause on the Sunny May stuff. When we come back with the Sunny May board members, we'll do the next. Is it all of the slides? Sorry, I got to scroll through these, and we'll do the myth with the Sunny May. And yeah, okay, yeah. So that would be
So the second part of this would be
CLA.
Yes. Perfect.
Great.
Thank you. All right, great. Thank you, Mark. Absolutely, really appreciate it. I'd like to introduce our partners from Clifton Larson Allen, Gabby, and Mandy, and Andrew.
Thanks,
They're going
Mark.
to come up and talk about the fiscal audit for 2025.
Good morning. Good morning.
Hi, everyone.
Hi. Good morning. Welcome. We have it on our laptops. Yes.
Yes.
Okay.
Well, hi, everyone. I'm Gabby Miller. I'm a principal at CLA within our state and local government group, and more specifically, our housing group. So I spend pretty much 100% of my time auditing or providing accounting services to housing finance agencies and public housing authorities. And I'm joined by Mandy Merchant, who's also a principal in our housing group, and then Andrew Rathouse, who's our subcontractor. So I'll be presenting the audit results on HFA, MBBA, and tobacco, and then Sunny May a little bit later.
Thank you.
So our first slide is who is CLA. So we are a national public accounting firm. We have about 120 offices, about 9,000 people. We're the #1 provider of single audits as well as accounting services to state and local governments throughout the country. And then our housing group specifically performs audits for about 15 state housing finance agencies. So we're very familiar with y'all's operations and all of that kind of stuff. So next up is our agenda. So I'm going to briefly go over the audit scope and process, our audit opinions, and our communications. our engagement finalization, so just what's left to before we issue the statements, and then our upcoming GASB standards. So for our audit scope, within our statements, we'll have our independent auditor's report, which is where we'll provide reasonable assurance that the financial statements are not materially misstated for all of the agencies as of October 31st, 2025. We'll also have our report, what we call our GAS or Yellow Book report, our report on internal control over financial reporting and compliance in accordance with government auditing standards. That'll normally be in the back of our financial statements. We also have our required governance communications, which Mandy will go over in a little bit. Our internal control and management letter. So that's where we'll have any recommendations for management that didn't warrant a finding or anything that governance would need to know about, but just some recommendations and that we saw that came up during the audit. We also have our reports on the investments that's required by the state. And then a little bit later on, we will be performing the single audit over HFA, where we'll have a report over compliance in accordance with uniform guidance. Do you have any questions on our state? No? Awesome. So next up is our audit process. So we do have a risk-based approach. We always like to say we do not look at every single transaction. We look at the financial statements of the agencies and tailor our audit approach accordingly. We do look at internal controls. We performed a test of general disbursements, loan receipts over all the agencies as applicable, as well as controls over journal entries, and there were no issues there. We do look at significant estimates, which Mandy will go over in a little bit, but one of the main estimates was mortgage loan receivables and allowance for loan loss, just making sure that the loans are not overstated, that management is looking over collectability and any major delinquencies to determine if they need to have allowance against them. We also looked at allowance for anticipated claims for SONYMA, which I'll talk about during the SONYMA presentation. And then as far as significant risks are concerned, there's two inherent risks to every agency, every entity, which is revenue recognition and management override of controls. And then, like I said, specific to HFA and SONYMA, that allowance for loan loss and the allowance for anticipated claims. We also looked at debt and covenants. So we did a fair amount of testing over the bonds, confirmed pretty much every bond amount, as well as the cash and investments. Any questions on the audit process? Nope. Awesome. I'll turn it over to Mandy.
Thank you. Okay, good. Make sure I'm on. Okay, so I'm going to go to the results. So first up, we're going to look at HFA. So if everyone's looking at that. And so two things. So that for the audit opinions, I'm happy to report the financial statements had an unmodified opinion, which means a clean opinion. So that's what you want to hear. For the financial statements, we also did not note any material weaknesses or significant deficiencies. There's nothing that rose to a level based on our procedures that we performed over HFA that required us to report that in that GAS report that Gabby mentioned. We'll go to the next page. We're going to skip over SONYMA and go down to MBBA. So MBBA, again, similar to HFA, the audit opinions, we do have an unmodified opinion. Again, a clean opinion on the no modification. And then for audit results, we did not note any material weaknesses, but we did have a significant deficiency for MBBA. We're going to talk about that a little bit more, but that is related to the financial reporting. The results of our audit procedures, we did have 3 audit adjustments that we had to make in order to properly state the financial statements this year. That kind of happened because MBBA is smaller and has a smaller materiality threshold as compared to the other agencies. So any kind of adjustment kind of rose to a level of having a significant impact on that one. But we'll go over those. Andrew's going to go over those with us. Next up, tobacco settlement, audit opinion unmodified for that one. And also for the audit results, we did not have any material weakness or significant deficiencies on tobacco settlement. So any questions on those results for anyone? Okay, so let's go to the governance communication. So this is going to come out in a letter. So once we finalize the audit, you will get a copy of this letter. It'll be several pages. It'll include the adjustments we had, the adjustments we're passing on, and also have the audit representation letter. So that'll all be provided at another date. But let's go over the overall first. So the thing that I always like to talk about for this is that we planned this audit and we executed on the plan. We didn't have to change anything. We didn't get to the end of the audit and decide that we had to redo anything. So that was the first and foremost thing. Management is responsible for the financial statements and the overall accounting policies of all the agencies. Just for your information, Note 2 provides all the accounting policies related to all these agencies. As part of this year, we had 2 GASBs to implement. We had 102 related to risk disclosures and also the conduit debt. And in both of these, we worked with the agency to properly implement them. So difficulties, we did not have any difficulties, and we weren't aware of the agency speaking to any other accounting firms as part of this process. Estimates, Gabby kind of touched on those, but we just like to make governance and management aware that there are estimates within these financial statements. The ones that Gabby had noted earlier, are ones that we consider to be significant. There is other estimates that are kind of hidden in there. You have OPEB and pension, stuff like that, that are the smaller scale depreciation, but these are the 3 that we thought were worth noting to governance. Now for the other section, the audit adjustments, we're going to flip the page in a second and go through the audit adjustments and the past adjustments. Past adjustments means that they rose to a threshold that we did not have to record them. We spoke to management and said, hey, we found this, it's $200,000. We got to report it, but at this point, you just want to pass, and we decide, as a group, management decides to pass on it. So we bring it to your attention, and then we passed on it. No disagreements with management, and again, we weren't aware of any kind of consultations. That was weird. All right, so let's jump into the audit adjustments. I'm going to flip this over to Andrew since he worked on MBBA and knows the specifics.
Good morning, everyone. So for MBBA, as Mandy mentioned, over time, as the agency hasn't issued new bonds, it has shrunk in size. So the materiality is lower relative to the other agencies. So there was 3 audit adjustments. The first audit adjustment was a $485,000 adjustment, which was between the receivable from municipalities and interest revenue, and that was just related to payment application throughout the year. Payment had come in from a county, was fully applied as interest revenue, but a portion of it was to pay principal. So there was an adjustment needed in that respect. The second adjustment was a $131,000 adjustment that was to amortize premium associated with one debt series that wasn't recorded during the close process. And the third adjustment was a $285,000 adjustment to the federal interest subsidy due liability. And this was when the agency went back to reconcile the liability. In prior year, there was an amount that had come in that was recorded to the subsidy due account, but it really represented interest revenue to the agency at that time. And that's a high-level summary of the 3 adjustments. I'm not sure if there's any detailed questions.
How did that occur?
Andy, can you say that again? We didn't hear you.
Oh, I'm sorry. How did it occur that we needed these sort of adjustments in the process?
So as part of our audit procedures, we were going through the supporting documentation, and we noted that amounts were not reconciled. So we brought them to management, and they concurred that an adjustment was needed.
Okay, I guess my question is, how did you, what happened that you arrived at the necessity to make these adjustments? I mean, what was lacking, or what was it our accountants, our internal accountants, or why did these adjustments have to be made? I mean,
Yeah, I got it. Ted, you want to take that?
Yeah, no, I'll take that. Basically, MBBA doesn't have any open bonds. We have our AHC accountant actually does part-time work on the MBBA. So we've addressed implementing the following internal control improvements. So these were all adjustments that we agree with. One had to do with an SAP issue. One had to do with our part-time MBBA accountant being on maternity leave. And the other one went back to 2010, but was not material, and the federal subsidy liability versus the interest. So one of the things we're going to implement going forward is we're going to put a full-time accountant on MBBA. We're going to have monthly supervisory reviews of key MBBA activity. We're going to strengthen the control over manual entries and a formal reconciliation monthly. And we wrote this back to CLA during the process.
Okay, so for instance, this going back to 2010, whether it was the accounting firm or our internal accountants missed this adjustment since 2010?
It didn't become material.
That was the Build America bond stuff, I assume, right?
Yeah.
All right.
So this year it hit the materiality. So you're right, it was not caught until CLA found it, and we agree with the adjustment entry.
Okay.
Any more questions?
Does the program revenue support a full-time account?
I'm sorry.
What'd you ask?
Does the program revenue support a full-time account? Staffing?
Well, we haven't, I've been here 2.5 years. We haven't hired one accountant, and we may just move people around to make sure that we're keeping a better eye on MBBA.
Okay.
Yeah. So good question.
Yeah.
About 1.5 million in interest, kind of earning in the program.
Great, thanks, Ben.
Should we go to past editions?
Sure, sorry.
Yep, and I'll quickly go over HFA. So HFAs, it's what had no impact on the statement of net position, but we saw some credit balances that were grouped within assets that should have been reclassed to liabilities, but that doesn't warrant, there's no impact on that position or anything, but that was just something that we wanted to note. That was about 46.3 million.
And then for SONYMA, there was, as we was talking about earlier, about interest rate swaps. As part of, not to get too accounting on everyone, but the deferred inflows is the offset usually to an asset. And within the deferred inflows, we found that the asset was offset and there was an additional balance out there. And it was some payoffs of interest rate swaps that you'd had back in the day. And it was determined that, first of all, there was, some of them should have been amortized, the remaining balances should have been amortized. And then there was kind of a little bit of unknown what had happened because these had occurred many, many years ago. So we'll get into that more for SONYMA later. And then MBBA, we also had another overstatement of a liability due to it just not being reconciled. So when we had requested supporting documentation for this $199,000 amount, we decided to pass on it at this point. And then last up for HFA and SONYMA, there were no disclosures related to capital assets for the subscription-based information technology assets and the lease liability. So just, again, they were not material, but we're just recommending in the future, just adding disclosures for those account balances. So, all right, so Gabby, you want to go where we are to finalize the audit?
Yep. And then to finalize the audit, so all the agencies are within different steps of our quality review. So CLA has a national assurance group specifically to state and local governments where they'll do the final checks, make sure the financial statements meet GASB standards and all of those requirements, and that our audit work papers are complete. So I think most of the agencies have already gone through the second review process. HFA and MBBA are currently being reviewed. And then once our second reviewer signs off, then we will get management to sign the management representation letter where they take overall responsibility for the financial statements that will be issued, obtain approval from the board, which we're doing right now. Then we will issue the financial statements, and then management can submit to Emma as well as to the state and all the other required stakeholders. And then after all of these agency financial statements are issued, then we will complete HFA single audit, submit the REACT submission, and then AHC, which has a different year end as of March 31st, we'll begin that audit and get that one issued by 6/30. And then kind of continuous as SONYMA needs bond issuance letters from their underwriters, we will perform those procedures. Any questions on that finalization? Yep. Awesome.
All right, I'll bring us home quickly. Just the GASB standards that are coming up for next year. So you can go to the next slide. So probably the one that's going to have the biggest impact on the agency will be GASB 103. It's just changing of the financial reporting model. So there's going to be a change in the management discussion analysis, just looking for more specific details, making sure that it's providing the readers more information. They felt that some of the MD&As across the industry weren't doing that. there will be some clear definitions on any kind of unusual or infrequent items. And the biggest thing you'll see will be on the income statement, just where non-operating and operating revenues are kind of flipping around. So Gabby's actually working through another HFA right now where they're going to be reporting subsidy amounts, interest income, and interest expense are kind of going to move around. So, but we have internally, we're already working with agencies. So when you guys are up, we'll be pros at it. So 1 and 4 will have a very limited impact on you all because you do have very little leases and capital assets, but just this standard just clarifying the disclosure that is supposed to be in the financial statement so we can work with management to kind of help with that disclosure for next year, give you guys some advice and some templates. And then lastly, just subsequent events. And this is in 2 years, just again, clarification of the subsequent events, making sure the information, what is being reported is within the new standards under GASB. So that's all we have. If anyone has any additional questions, you know, you all are very busy today. But thank you for letting us come here and present.
No, thank you. I know just would say on behalf of the TED and the team and to you all being new and back to the board, thank you for joining us this year and for doing, for jumping in on this. And thanks TED to you and your team for, I know it was a lot of work to get to with a new firm and sort of going over everything. So thanks to all of you for that.
Yeah.
I'll never work with you all.
Thank you.
Any other questions? Great. Okay. Thank you all.
I'm gonna do the mic drop.
Okay, well.
Okay, so we have before the audit committees for HFA, MBBA, and TSFC, and before the full boards for HFA and MBBA, TSFC resolutions that were submitted in connection with this item. Assuming the motion second previously recorded, all in favor, please say aye.
Aye.
Aye. Aye.
The motion is adopted and, the motion is carried and the resolutions are adopted. Thank you.
Okay, great, thank you. Item 4 is a consent item. Do you want to do all the consent items?
Yeah, we should do items 4, 5, and 6. These are supplemental to the financials and investments.
We're going to have to come back to this for SONYMA.
Yes. But we'll have the approval of all the other boards.
All right, so there's no presentation
separately. So now before the HFA, MBBA, and TSFC boards, in addition to the HFA audit committee, with respect to items 4, 5, and 6 on the agenda, are resolutions that were transmitted in connection with these items. Assuming the motion seconds previously recorded, all in favor, please say aye.
Aye.
Aye. Aye.
The motion is carried and the resolutions adopted.
Great, thank you. Item 7, remaining annual reports for submission to the Public Authorities Reporting Information System, PARIS, for fiscal year ending October 31, 2025. Will?
Thank you, Chairman. So as a reminder, because of the required change in our auditing firm and the delay in the annual financials, we were not able to submit a complete PARIS filing for HFA, MBBA, TSFC, and SONYMA by the end of January, which is the normal due date. We previously, these boards approved all the PARIS submissions that included material that wasn't related to the financials. Now we are back before the boards to approve the remaining PARIS filings for these agencies that incorporate the information that includes the annual financials. So this is a follow-up of the vote we did in January, just to account for the financials at this point. If there are any questions, otherwise before the HFA, MBBA, and TSFC boards are resolutions transmitted in connection with this item. And assuming the motion second previously recorded, all in favor, please say aye.
Aye.
Aye. Aye.
The motion is carried. The resolution is adopted.
Okay, thank you. Now we have 2 more consent items, 8 and 9, with no presentation.
Sure. Now before the HFA, AHC, and MBBA board, also the TSFC board for item 9, are resolutions transmitted in connection with items 8 and 9 respectively. Assuming the motion second previously recorded, all in favor, please say aye.
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 The motion is carried.
Aye.
The resolution is adopted. Thank you.
Thank you. Item 10, cybersecurity review report, and Hanim Babayeva, Vice President, Internal Audit, will present this item. Hanim?
Good morning, everyone. I'm here today to ask for your approval for
Can you speak into the...
for the cybersecurity review report that was performed in 2025 based on the internal audit plan. And cybersecurity was reported as one of our highest risks for the last several years. That's why it was included into 25 plan. We performed the audit, and industry-wise, like worldwide, the cybersecurity events, phishing attacks are increasing dramatically. So our agency is not exclusion from that risk. So that's why we compared the practices of our cybersecurity team to the best practices, also industry standards. There is an institute that issue special standards for cybersecurity. In addition to that, in 2025, the summer 2025, governor issued a law related to cybersecurity reporting and controls. So all of this were incorporated to our work papers. So we assessed whether HCR cybersecurity policies and practices are in compliance with the applicable requirements, policies, and industry standards. We reviewed and assessed internal and external cybersecurity practices to identify any potential non-compliance gap, vulnerabilities, risk areas, and areas for improvement. And we determine if established cybersecurity measures and control strategies are adequate to the organization's current risk profile. So we determined that organization currently is in a better position than in comparison to previous years. As IT management stated, their cybersecurity posture became much stronger during this last years. They also use outsourcing approach. So they use a firm that helps them, vendor that helps them with the monitoring function and etc. But at the same time, full responsibility lays with the internal team. So, and this was the reason why we insisted on certain recommendations, though there was some degree of disagreement with us, but we still recommend formal cybersecurity strategy and dedicated budget as a standalone document to be formalized, documented, and periodically presented to the board. We recommended limited cross-functional collaboration on cybersecurity strategy, because cybersecurity is not just IT matter, it's a general matter that all departments should participate in and have a responsibility about that. And we also suggested enhancing the cybersecurity training and awareness policies, because what is happening is that as many state agencies, our agency also rely on ITS solely when it's come to the training. And the materials in that training is usually outdated. They do not include the modern attack scenarios and etc. So we suggest that our team be a little bit more proactive about that and periodically send some updates about the recent events, some like a do's and don'ts for our personnel, like what not to do, what to do, like how to protect, because a lot of them are associated with the human, like natural human reactions to certain things. And we want our personnel to be ready for this type of the, let's say, attacks and address them if they will see them. So not just rely on ITS's training. So this was overall three main recommendations we made to the agency, and we believe that they're worth following up on during next year.
Good,
Thanks.
thank you. Great,
questions.
No, I think the results of three things that are recommended are like, I think really, really important to the financial health. I mean, the risk that, having watched The Pit, like the shutdown of the emergency room, like, but I think the other thing too is we had the speech on AI or the learning on AI, but again, it's being used on the other side. And I think it's getting way, way, way more sophisticated in terms of the type of attacks that are taking place. So just knowing that banks and other folks, and I think we are very much like a bank in many respects, are taking, really, really proactive, just because it can be very costly, and governments are seen as low-hanging fruit. So sophistication, I think these are great recommendations.
Thanks.
Great, thank you. Will?
Okay, now before the HFA, AHC, MBBA, and TSFC audit committees, in addition to the full boards for those agencies, are resolutions transmitted in connection with this item. Assuming the motion second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you.
Okay, thank you. Well, the next two items, 11 and 12, Honey will present the internal audit plan and the internal audit strategic plan. Honey?
Again, thank you. As our charter requires, we are bringing internal audit plan, annual plan for 2026 for your review and approval. This year plan was based on a risk assessment study that was performed across the 5 agencies. And as a result, we included to our preliminary initial plan. Why we call it initial? Because board and executive management always have a right to request adjustment, include additional items, or prioritize. That's why we call it initial, because during the year we might review it and bring additional items for your approval. This year we included a compliance, like statutory compliance review, because there is a lot of changes in legislative like platform that surrounds our organization. So we as an organization itself sees the risk coming from the potential non-compliance. So we decided to include that. Human resources element was reported as part of the risk assessment. So we will review our staff retention and ability to, let's say, hire, attract and keep the personnel that are essential for our organization. We included one servicer bank audit, which is part of the SONYMA's activities, and we also included follow-up, of course, follow-up of the previous year's recommendations, and we usually also help external auditors when they come and do examination of our agencies. We'll act as liaisons. So this is also part of our plan, and ad hoc requests, if they will be placed, we are ready to take them as well.
Great, thank you.
You want to do the strategic plan also?
Yes, and strategic plan is a new thing that is something that I'm bringing this year as an informational item only. So I'm not requesting your approval because it's the first time created like a document that reflects maturity level of internal audit department for our organization, and also long-term plans in terms of what is our strategy, where we are going, and how we are planning to comply with the internal audit standards to the full capacity. Because we are still not in a full compliance, but we are trying to go there. For example, implement the fraud awareness training, add additional skill sets to our team. So this is the like a long-term plan and maturity assessment of our team, which for this year, as I said, I'm bringing as an informational item, but it is required to be reviewed and approved by the board according to the internal audit standards. So from the next year, this will become part of the regular plan approval request.
Great, thank you. Okay, so we need to take action on item 11.
Right. Item 11 before the audit committees only for HFA, AHC, MBBA, and TSFC is a resolution transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
Aye. Aye.
The motion is carried and the resolution is adopted. Thank you.
Okay, so we'll skip 13 for now.
Thank
Yes.
Thanks. Okay, item 14. HCR HTFC revised annual audit plan for fiscal year 25 and 26. And Heidi Nark, Director of Internal Audit and Quality Control, present this item and the next two items. Heidi?
Good morning, everyone. Thank you. First up, as indicated, is the revised annual audit plan for fiscal year 25-26. This was initially brought to you last year. And then based on the Homes and Community Renewal Internal Audit Charter, we do want to go ahead and be fully transparent in the work that was actually conducted throughout the year. There were some changes in timing, based on staff, based on audit work priorities, as well as other needs, including follow-up on prior year corrective action. So the actual time reflected on the HTFC travel audit, the actual time on the IDA audit, the actual time on the human resource audit is reflected within that 2025-2026 revised audit plan. And this audit plan, the revision is subject to update and approval. And so we're just bringing this forward to you. Happy to answer any questions that you might have.
Thanks, Heidi. Do you want to act on all three of these?
I think, Heidi, do you have a separate presentation about the performance evaluations, or apologies? Did you just cover that?
No, I have 3 items. You want me to do all 3?
Right.
Yeah, no problem.
Yeah, just go ahead. We'll do it and then we'll
Okay,
act on all
yeah,
three.
I can go ahead. So the next item is the annual audit plan for fiscal year 2026-2027. As noted in the Homes and Community Renewal Internal Audit Charter, at least annually, the Chief Audit Executive will bring forth to the Commissioner, CEO, the audit committees, and the board an internal audit plan for review and approval. So on here still is the HTFC travel. We're wrapping that up and getting into preliminary findings section of that audit. We're also carrying forward the Community Development Block Grant Disaster Recovery IDA audit. Last year, we only had a moment in time where we conducted some planning work, but this year we are planning on starting that in just within the next couple of weeks. And additionally, as it relates to HTFC, we will conduct follow-up on prior audit corrective action plans as well. As part of this audit plan, we do note the budget and current staffing level for HTFC. We're currently in the process of hiring an HTFC internal auditor, anticipated to start in July pending approval. We also want to just take a moment and acknowledge our organizational independence as well as compliance with ethics standards as required by the global internal audit standards. And another aspect of this audit plan that I do want to just note, when we issue audit reports, we currently acknowledge that we're not in full conformance with the standards. We have an upcoming external quality assessment, which we're hoping to have done in the fall. And we're hoping, that will bring us forth more towards compliance with certain internal audit standard requirements that we have. So that's the new audit plan. And then I wanted to bring forth the HTFC probation report and performance evaluation human resource audit that our office conducted this past year. This particular audit, we went ahead and we were making the determination whether or not HTFC supervisors were completing performance evaluations for their staff. This was a collective effort for the entire office. So we were also looking at DHCR employees in the organization. Performance management is an ongoing process which seeks to align employees' work with organization goals. It's important that everyone's on the same page, has clear expectations, that performance is monitored, feedback's provided, and folks are working together for an employee development. As it relates to HTFC, we found that there was not consistent PEs being completed. So we looked at 80 PEs and we found that 25 were completed. So that's approximately 31%. In fact, for 7 of the HTFC employees that we looked at out of 16, there was not a single performance evaluation conducted for those employees. There was only 1 of those 16 employees that had all their expected PEs completed, and the remaining 8 employees only had some of the PEs completed. As it relates to probationary reports, HTFC at the time of the audit did not have any probationary report requirements, which is inconsistent with other practices, other employees within our organization. So we found that there were inconsistencies as a whole under HCR. There's also no policies and procedures for supervisors to provide PEs to HTFC staff. Additionally, there are competing priorities, lack of formal training, and supervisors also reported heavy workloads as reasons for not conducting the performance evaluations. So, we are recommending that there are standard operating procedures created for conducting PEs, that there are policies and procedures developed and enforced to hold supervisors accountable for completing PEs and for them actually to have as a tool to conduct the PEs. Of course, consideration for implementing probationary reports for all employees and having periodic mandatory courses to supervisors on the importance of PEs and conducting effective evaluations and understanding various requirements. And that's just a summary, but of course there's more detail in the memo, of course, more information in the report, and happy to answer any questions that you might have.
I have a question, Syracuse. I just, the word training has come up consistently over all of these reports. And because of the siloed nature of the organization, right, over across the agencies, how do we build in the resources needed to address these issues across all of the agencies and across all of these needs, right? I mean, there's a lot of training gaps that have come up in these audits in this particular meeting.
I do know HCR does have a training and development unit as it relates specifically to performance evaluations. There is a supervisory course that I know has been not mandatory. Has been discussion and some push for supervisors to go ahead and take that course. I'm not sure if anybody else has anything to add on that question. But yeah, I do think that training and development is something that the organization is looking at improving as a whole, because it is important, and it is important to be consistent.
Heidi, can you hear me? This is Betsy.
Yeah, thanks, Betsy.
No problem. Unfortunately, our Sev Morrow, who would love this conversation because he couldn't be more invested in trying to get all of us to do performance evaluations and couldn't be more invested in training and development, which is actually where he started his career, is on vacation. So I will step in and just say, B, to your question, and to, as Heidi said, there is a training and development team here at the agency that works across the agency. We've grown the team and continue to look at times for ways to increase resources when necessary. On the performance and evaluation issue, it's not good. There's no denying that. We have tried
to simplify and to encourage folks to do it, we need to do better. And it is one of the priorities for the HR team this year. They're actually working on trying to even simplify further to try and encourage people to not simplify, but not dumb it down. But very much appreciate the audit and focus on it, and appreciate the board's support for all of this.
Yeah. So just one question, and this is more procedural, I guess, but why do we separate out Housing Trust Fund Corporation from all the other agencies from an audit standpoint? Like, why don't we just do it all together?
What do you mean?
So we have,
Like, we have audit for HTFC, AHC, SONYMA, and then we have audit for HTFC.
And DHCR.
And DHCR.
Yeah, I don't know.
well, I mean, historically, we have two separate internal audit teams.
Right, I'm asking why.
Right, it's a good question. I think it's a legacy of our, as B pointed out, the siloed nature of our, precedent agencies and the ongoing integration process.
Yeah, I mean, DHCR is obviously somewhat distinct
Yeah,
from HFA and
course,
SONYMA doesn't have a board. So I don't know if there was at some point in time sort of just a division of labor where HTFC was put with DHCR because it sort of functions a little differently. But we could certainly look at that from a board perspective.
I would also just add that.
Mr. Chairman, if I may interject some observations here. Looking at the agenda, items 14 through 59 are not pertinent to MBBA and TSFC, and only items 60 through 63, which are information items, including the bond bank and TSFC. I was wondering whether or not, if they're informational items, and there's not going to be any discussion, should my role in this be?
Would you like to be excused?
Well, I'm just, I'm looking at all the presentations you have, and I'm just curious as to if there's no more action items on behalf of MBBA and TSFC, then I would wonder if you want to move for an adjournment. And of course, I don't know how the other members of the MBBA and TSFC committee feel, but.
Yeah, we'll close.
Or else advance the information items ahead of all the rest. Because then items 64 through 71 are HFA, SONYMA, and HTFC items. So I'm just wondering whether or not we could move for an adjournment of the two boards.
Yes, okay, we will do that. I think we do need to, let's act on 14 through 16, and then we'll adjourn MBBA and TSFC.
Yeah.
Okay, we're good.
Thank you.
Okay. Now, before the HTFC Audit Committee and the HTFC boards are resolutions that were transmitted in connection with items 14, 15, and 16, respectively. Assuming the motion second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Okay, let's adjourn MBBA and TSFC.
Sure. Assuming the motion second previously recorded, all in favor of adjoining the meetings for MBBA and TSFC, please say aye.
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 The motion is carried and the MBBA and TSFC meetings are adjourned.
Thank you.
And
Okay.
Mr. Gonzalez.
Okay, continuing on.
I
Item
apologize for that.
No, that's okay. Item 17, administrative budget request for fiscal year 26 and 27. Stacy Mickle, Director of Financial Administration and HTFC Treasurer, will present this item.
Good morning, everyone. I am here today to present the fiscal year 26-27 administrative budget and the program outline for the Housing Trust Fund Corporation. This year, I'm going to try to, everything's in the materials, so I'm going to try to be very high level and very short since we have such a large agenda. We are looking at an increased budget to $98.4 million for this upcoming fiscal year, which is approximately 17% increase. This is split between approximately $34 million for personal services and $49 million for non-personal services. We are anticipating an increase in revenue of about 22%. Historically, we have used the PVCA fee revenue as our only source of administrative and unrestricted revenue. But over the course of the last couple of years, we've been able to receive and document through LATS TDS expenses related to federal programs that have allowed us to increase the cost recovery revenue from various federal and state programs. Within our budgets, the increases are due in large part to personal services increasing with 17 new staff being proposed. Cost of living and other salary increases are also budgeted. Within the non-personal services, we're increasing for a number of contractual services, most notably investments in technology for replacements of the HTFC accounting system, a grants management system, fingers crossed, and potentially some HR improvements. We are also looking at some contractual services for both sustainability and outside counsel services. So that's really where most of the increases are seen. The programmatic budget that's outlined in here is based off of the New York State executive budget. Obviously, those are just estimates as we are still within the budget negotiation period at the state. I am happy to answer any questions that are here and in the board materials. Otherwise, I am seeking approval for the upcoming 26-27 budget.
Thank you. Questions? Will?
Okay, this item is before the Audit Committee and Governance Committee for HTFC and before the HTFC Board. And their resolutions transmitted in connection with the item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Great, thank you. Item 18, contract with AXI Systems Incorporated for supplier diversity, compliance, and portfolio management solutions. And good morning, Chino Okonkwo, Vice President, Department of Empowerment, Compliance, and Opportunity will present this item. Chino,
Good morning. Good morning. Do I need to speak into this?
Yeah.
Yes, please.
Okay, great. I will do that. Good morning, members of the board. Thank you for the opportunity to speak today. I'm here to seek your approval for HFA to enter into a contract with AHC to offer a cloud-based technology platform that will strengthen how we support the supplier diversity compliance. This procurement represents a critical step in modernizing how we track and manage MWBE, SDVOB, and EEO compliance across the agency. At present, these functions are largely supported through manual processes and spreadsheets. While our team has done a strong job maintaining these systems, they require significant coordination and manual effort, which becomes increasingly difficult as our portfolio and reporting needs expand. A centralized platform will provide more consistent visibility across programs and more timely access to information needed to support oversight and decision-making. Additionally, in recognition of the board's prior direction to modernize DECO's compliance processes, this investment supports that effort and strengthens our ability to manage compliance in a more coordinated and consistent way. This recommendation follows a rigorous and competitive procurement process designed to ensure broad participation and identify the best value solution for the agency. The RFP was issued on October 22nd, 2025, and widely distributed through multiple channels, including the New York State Contractor Reporter System, HCR's website, and LinkedIn pages, and targeted outreach with over 130 majority firms, over 500 MWBE and SDVOB firms, as well as partner organizations such as the Manhattan Chamber of Commerce and New York Tech. We also hosted a pre-bid conference on October 30th, 2025 to provide clarity on scope and ensure vendors were well positioned to respond. Responses were due on December 12th, 2025, and we received 6 proposals, including 2 from MWBE firms. Our review committee conducted a structured multi-phase evaluation process. Following initial scoring of the written proposals, the 3 highest ranked firms were invited to participate in interviews and live demonstrations. After combining scores from both the written and demonstration phases, AHC was identified as the highest ranked proposer. Reference checks confirmed their experience delivering similar solutions, and they demonstrated a strong implementation approach, commitment to partnering with the agency. AHC has also supported similar work across several New York State agencies and institutions, demonstrating experience operating at both the public and private space, including agencies such as DASNY, SUNY, NYPA, CUNY, and institutions such as Cornell University and Columbia University. Every step of this process was guided by our commitment to transparency, fairness, and best value. So what will this tool actually do? The selected tool will allow the agency to achieve 4 key objectives. 1, track our MWBE, SDVOB, and EEO objectives. 2, support documentation and tracking of good faith efforts in accordance with state requirements. 3, strengthen our internal controls through automated processes and embedded quality control measures that improve data consistency. And 4, one that I'm very particularly excited about, and I think the commissioner will be too, provide real-time dashboards and data visualization tools for program teams and leadership. So I want to make this a little bit more real. So to bring these objectives to life, I want to share 2 examples, one an internal and one from a developer perspective in order to kind of illustrate the impact of the tool. So starting with an internal perspective, in a typical monthly check-in, for example, one that I have with like Russell and Alexa, and if we're looking at the 4% portfolio, a key question that we would want to ask and kind of be curious about to understand is how are each of our projects, or maybe by region, doing and performing against MWB and SDVOB goals? Answering that question requires pulling multiple data points, such as region, developer, funding amount, attainment levels, in order to understand contract level performance and in order to understand trends. Today, assembling that requires information, it requires considerable amount of time and effort in order to pull that together. With this platform, that same information will be readily accessible and immediately at our fingertips through dashboards, enabling DECO and everyone throughout the agency to have this information, to have timely conversations where we can actually move the needle with our MWB and SDVOB engagement. On the developer perspective, this is also highly impactful for them as well, particularly when we're thinking about things like our good faith efforts and as they're making efforts in order to engage MWB and SDVOB firms. The system will allow them to do that more efficiently, identifying certified firms based on scope, location, and proximity to project site. They will also be able to conduct all of that research in the tool directly, email the vendors directly within the tool, and we would be able to gather all that information within the tool, allowing us to create more complete and organized records of engagement. This in turn allows the compliance team to review good faith efforts more efficiently and focus more of the time on strengthening engagement with MWB and SDVOB partners and supporting developers in meeting program goals. So operationally, overall, this tool modernizes our compliance management processes and enables a more timely and informed engagement process across the agency. Based on this thorough process and agency's needs, I respectfully request your approval to move forward with this contract. We seek your approval to enter into a 5-year contract with 2 2-year optional renewals and 1 final 1-year renewal, not to exceed $2.9 million in the initial 5-year term. These terms both provide stability and flexibility for the agency moving forward. Thank you for your consideration, and I will answer any questions.
Thanks, Gino. Just a quick question. So you said that of the respondents, 2 were MWBE.
Yeah.
Is AXI one of the 2?
It's not one of the 2 that.
Okay. Thank you. Any other questions? Okay, well.
Okay, this item is before the HFA Governance Committee. Resolutions transmitted in connection with the item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted. Thank you, Gino.
Thank you. Item 19, amending grant agreements with fair housing organizations to extend performance time period and increase funds. Nadia Salcido, Director of Fair and Equitable Housing Office, will present this item.
Hi, good morning, everybody. I'm here again. FEHO, the Fair and Equitable Housing Office, implements programs and policies to remove barriers and unlock housing for New Yorkers. And here I'm requesting $4.2 million to extend 6 grant agreements with 6 great fair housing organizations throughout the state to continue our fair housing testing, education, outreach program. These funds were appropriated by the legislature for these purposes, And each of these 6 orgs in the existing program are leaders in the state and nationally, kind of in the fair housing space and the fair housing testing space specifically. So we would appreciate your approval in extending this program for funds and time.
Thank you.
Thanks.
Questions? Will?
Now before the HTFC board, a resolution is transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 Thank you. Thanks.
The motion is carried and the resolution is adopted.
Great, thank you. It's my favorite part of the meeting where we turn things over to Crystal Loeffler for her. Items, let's see, I guess, Crystal, you've got item 20 and the next 6. Item 20, vacant rental program open round awards. Crystal?
Thank you. You get to spend a lot of time with me today, I guess.
Right.
So the first item is vacant rental program award. So 40 million was made available in the 25-26 state budget to support a second round of the vacant rental program. This supports rehab of vacant apartments in buildings with 5 or fewer units, turning them into rental units for low and moderate income renters. We split this 40 million between 2 funding rounds since it was right on top of a prior year 40 million. And today we're presenting the second batch of recommended awards to commit the available funding. So we are seeking approval to award 23.7 million among 19 non-for-profit and municipal applicants and enter into grant agreements or amend grant agreements with existing users. The full list of awardees is included in the memo, and I'm happy to answer any questions.
Great, thank you. Well,
I'll note for the record that Ms. Young Watkins has recused herself from this vote. Now before the HTFC board, a resolution is transmitted in connection with the item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. Item 21, increased funding for existing New York State Community Development Block Grant, Coronavirus Aid, Relief, and Economic Security Act awards. Crystal.
Thank you. New York State received 127 million in CDBG CARES funding from HUD in 2020 to help communities prepare for and respond to COVID-19. This funding resulted in awards to 93 municipalities and non-for-profit organizations. A small balance of funds remains from returned funds and projects that strangely came in under budget. To commit this balance, we released a funding opportunity in November of 2025 for a final round of funding to support community food providers specifically. Following a competitive evaluation of applications which focused on impact, capacity, and readiness, we are recommending 3 awards totaling just over 1.2 million. These awards to the Food Bank of Central New York, the Salvation Army Empire Division, and Unity House in Troy will expand the distribution of food and hygiene items across 13 counties. We are eager to deploy this remaining funding as the CARES funding must be fully expended by November of this year. So I'm happy to answer any questions you may have about this item.
Thanks, Crystal.
Now before the HTFC board, our resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
Aye. The motion is carried and the resolution is adopted.
Okay, New York State CDBG open round awards. Crystal.
So last year, we expanded our CDBG open round funding opportunities from just economic development to include public facility, imminent threat, and community planning activity funding within a single open round. This will help have fewer items on the monthly agenda for us. This month, we are requesting approval to award just over 2 million among 8 applicants. These include 4 community planning applications, 2 economic development applications, and 2 public facility projects. The planning projects are focused on technical assistance and pre-development studies to help communities prepare for future CDBG eligible activities. And this month's economic development awards include support for 2 local microenterprise programs, and the facilities projects support emergency vehicles and accessibility modifications to a community library. More details are available in the memo and briefing sheets, and I'm happy to answer any questions on this one.
Thank you. Questions? Well,
And now before the HTFC board are resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. 23, New York State Home 2025 Home Buyer Development Open Round Awards. Crystal.
OCR offered an open round funding opportunity this year to support a home buyer development program using New York State Home Program funds. This program allows non-for-profit developers to request funding to support rehab or development of up to 4 homes for sale to low and moderate income home buyers. This activity is intended to support small projects that may not be able to access the agency's larger development resources. This month, we're requesting board approval to award up to $1,750,000 among 3 applicants. These 3 awards will result in 7 homes available for purchase by low and moderate income home buyers. I think that's it, but I'm happy to answer any questions about these projects specifically.
Thanks, Crystal.
Now before the HTFC board are resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
24, additional New York State Home Program Award for Better Community Neighborhoods Incorporated.
Thank you. The housing rehabilitation program funded by our federal home funding supports rehab of owner-occupied single-family homes. The intent is to provide basic repairs that will extend the life of the home and deliver a code-compliant, healthy, and safe home for the resident. The city of Amsterdam was awarded a $750,000 award of home funds in December of 2024. Due to difficulties administering this award, the city withdrew from the contract and has so it's been terminated with no funds expended. BCNI, another local administrator of the home program funding and seasoned administrator, has requested to expand its current home rehab award to serve Montgomery County and the city of Amsterdam. They have a full staff dedicated to implementing housing and development programs in both Schenectady and Montgomery counties. So we're proposing an award increase for BCNI's existing home award to help serve the city of Amsterdam and Montgomery County, which is currently unserved since the city was unable to complete its award. So we are requesting an award increase, and I'm happy to answer any questions on this item.
Thanks, Crystal.
Thank you.
Okay, now before the HTFC board are resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried. The resolution is adopted.
Thank you. 25, Land Bank Initiative Awards. Crystal.
Last year, the Office of Community Renewal offered an open round request for applications to allow land banks to request land bank funding as new project needs arise. This month, we're seeking approval to award $5.1 million among 3 land banks. The awards include $2 million for the Allegheny Land Bank, $1.7 million for the Franklin County Land Bank, and $1.4 million for the Sullivan County Land Bank. The land banks will use the funding to support property acquisition, demolition, but primarily for rehab and construction activities. This includes projects from partial stabilization to ready a project for development or full rehab for homeownership opportunities. Thank you for your consideration of this item, and I'm happy to answer any questions.
Thank you. Will.
Now before the HTFC board are resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
The motion is carried. The resolution is adopted.
Thank you. Item 26, supplemental funding for heat pumps, Green Small Buildings Program, and Crystal and Samantha Pierce, Vice President, Sustainability Office of Housing Preservation, will present this item.
This is an exciting one, and I'm presenting jointly with Samantha from the Office of Housing Preservation Sustainability Team. And so I'll start, but Samantha can jump in and add some technical flavor to this if she'd like. As part of the 25-26 enacted budget, Governor Hochul provided $1 billion in capital funding for the Sustainable Futures Program. HCR intends to use $150 million of this funding to support a Green Small Buildings Program, which will support installation of all electric high performance heat pumps for space heating and domestic hot water. Today, we are seeking authorization to award funds and enter into grant agreements for the Green Small Buildings Program as supplemental funding for the installation of heat pumps and eligible enabling work scopes. The idea is that we'd like to offer a funding opportunity to users of our existing portfolio of programs. Then when a project scope is an appropriate fit for heat pumps, the local administrator will have access to this new funding source for expenses associated with the heat pumps to supplement the primary source of rehab or construction funding in a project. So today, specifically, we are seeking approval to award funding not to exceed $125 million and enter into grant agreements under the Green Small Buildings Program with existing administrators of HTFC and AHC grant programs. We anticipate the individual awards will not exceed $750,000. And, the release of funds will depend on successful completion of approved and eligible work scopes under their primary sources of funding. So we are eager to offer this new opportunity for our users. There are more details in the memo, and we're happy to answer any questions.
Thanks. Samantha, anything you want to add? Okay, great. Well,
Are there specific programs that this would attach to, like PLP or?
Yeah. Krista, you want to answer that? So which specific programs will this get added to?
Sure. I'm sorry, we can't hear the question, but so we're going to make it.
What are the specific programs that the money attaches
to? The specific programs.
Sure. So our plan is to offer it to local administrators in any of our grant programs. So it could be our CDBG funding, home funding, AHC, the land banks that participate, virtually any of our local administrators that have existing rehab or construction sources, we'd like to make it available. There are, relatively limited circumstances in which these heat pumps will be appropriate for small rehab projects. So it will depend on individual scopes being evaluated, but we want to keep it pretty wide open for many of our participants under HTFC and AHC grant sources.
I would just add that, excuse me, I would just add that weatherization is a part of that list as well.
That's great. Okay.
excellent. Good. Thanks. Well.
Okay, want to note.
Just real quick, I just want to, having experienced this myself, like the spike obviously in electricity rates, and especially I know, for example, in NYSEG's territory upstate, the day and night rates went to 96 cents a kilowatt at one point, and people were getting freaked out because it's 4 to 5 times what their normal electric bill is. So I just want to make sure that we're monitoring this. Obviously, in the city where everyone's getting flyers about batteries free from Con Ed and other things like that. So it's great to go all electric, but obviously I think this is some of the governor's concerns right now about some of the climate laws is the burden that it's placing on homeowners. So just to be cognizant of how we implement, because it's great to have really green, but if people can't afford to stay in their homes, I think, it's a much bigger problem for operating budgets of buildings as well.
I would just add that part of this program design is that the requirement to do the screening Crystal was mentioning includes a tool that my team developed to evaluate the price shift, not shift in terms of responsibility of paying, but the cost potential increase or decrease based on the existing conditions compared against the heat pumps going in. We designed it specifically to sort of walk that balance of providing the answers to your concerns, to flag if the home would be a good candidate or not based on the locality, the rates, and other variables, as well as be non-technical enough that the local administrators could fill it out without sort of advanced engineering support required to complete the tool.
And I think to Sadie's point, the use of the weatherization money to obviously lower people's load first and then do the heat pumps is an important factor. So that's great.
Yeah, I think also targeting existing electric buildings is a great opportunity because they're very inefficient, and so an efficient heat pump, you're going to get the savings while you're still paying electric. So.
Yeah, as of right now, the tool actually does not allow for natural gas without increased building envelope improvements to qualify as being viable. So it's primarily focused on oil and electric buildings.
Great. Well.
Okay, I want to note just for the agenda, this item is before both the HTFC boards and the AHC board. Now before the HTFC and AHC Board are resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
Assuming, the motion is carried and the resolution is adopted.
Great. Crystal, thank you for all of your presentations. Item 27, Green Pre-Electrification Program Awards. Samantha?
So in the FY 25-26 budget, there was made $2 million available for the creation of the Green Affordable Pre-Electrification Program, which is focused on improving health and safety conditions in both single-family and multifamily homes that would otherwise make the home or property ineligible to receive existing programs such as weatherization, NYSERDA Empower, and other energy efficiency and decarbonization programs. I'm seeking the board's authorization to enter into contract with 12 different community action agencies and nonprofit organizations to deploy these funds across the state.
Terrific. Thank you. Questions? Well,
now before the HTFC Board are resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried. The resolution is adopted.
Thank you. Item 28, HTFC authorization to administer Empire State Development and Department of State awards for 2 projects. Brett Hebner, Vice President, Multifamily Finance, will present this item. Brett?
Hi, folks. You've seen both of these 9% projects in the past. They were previously presented to the board for approval of the subsidies associated with the 9% awards. The first is Oval Wood Dish, and this is an 80-unit adaptive reuse of an abandoned factory up in Franklin County. And what occurred was that additional Empire State Development funding needs to be brought into the project because the non-residential portion of the project that was going to be separated by a condominium structure has now been folded into the main project. And we've been asked to administer those funds in conjunction with our existing subsidy that was previously approved by the board. And that increase is about 10%, requiring the board's approval. So essentially, we're increasing the amount of ESD funding from 1.9 to 2.5 million associated with this project. The second project here is Home Leasing's Huntington Apartments. This is another adaptive reuse, this time in Seneca Falls, again, previously brought to the board for approval of the other subsidies involved. They subsequently, after construction finance closing, received a Downtown Redevelopment Initiative Award, or DRI award, through the Department of State. As you know, Department of State typically suballocates those DRI awards that are associated with housing projects to HCR. And so we're asking the board's approval to essentially administer the $800,000 DRI award in conjunction with the other subsidy awards that were previously approved by the board to the Huntington Apartments project.
Great. Thanks, Brett. Questions?
Now before the HTFC Board are resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. 29, 9% award for Hillside Avenue Apartments, Queens County. Brett?
Yes, this is our last of our 2024 round 9% awards. Previously, the board saw all of the other 28 awards. You'll be seeing the new round, the 2025 awards in tranches coming up in future meetings over the summer. This one in particular had some changes at post-award that had to be kind of finalized before we brought it to the board. So OHEL Children's Home and Family Services is the applicant and awardee. This is a 94-unit, 9-story new construction project in Queens, a supportive housing project that is co-funded with Office for Mental Health's supportive SP SRO program. And there's associated with it on our side is $11.3 million supportive housing opportunity program award and a $777,000 community investment fund award, since there will be non-residential space in the form of a outpatient OMH clinic on the first floor. It's also being funded with other sources, not just CIF, but those are the two subsidy awards that we're asking for the board's approval today. Just one quick note, the project ID in the chart is 1 year off. I was getting ahead of myself and wrote 2025. This is actually 2024. Char's number, it's correct in the briefing sheet, but just to bring it to the board's attention. That's it.
Thanks, Brett. Questions? Will?
Now before the HTFC board, our resolution is transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. 30, annual review of Section 8 local administrative contracts and change in management fees. Daniel Byer, Assistant Commissioner and Vice President for Rental Assistance, will present this item. Daniel?
Morning. This is for the Section 8 Housing Choice Voucher Program and our 24 local administrators. These organizations are a combination of nonprofits, a couple private contractors, and a couple local government entities. They provide voucher services on an annual basis and administer somewhere in the neighborhood of 44,000 vouchers, along with in-house staff in New York City. Normally, this would be an informational item. The contracts for the local administrators call for them to get raises 1% and 4% each year, and that's contractual. So this would be an informational item. But this has been a particularly difficult year for our LAs. The federal funding for Section 8 has been very limited, obviously under the current administration. So the number of vouchers we've been able to afford has dropped by about 3,000. In addition to that, we've been in the process of implementing our portals, the public-facing customer portals that we use for both our participants and our applicants. While this is progress, that was also work for our LAs in testing those new portals and dealing with customer questions and fielding all that. In addition to that, obviously, there are a lot of federal rule changes that have either already happened, like the Inspire inspection standard, or that might be coming down the pike that could significantly affect the program and create a real learning curve for the LAs. So specific for this year and in consultation with both procurement and the legal department, we are proposing a one-time 10% bonus for the LAs. This will cover increased staffing time and costs associated with administering the program that were not contemplated in the scope of work, but for which the LAs were expected to perform. I would note that many of these nonprofits also perform program services in other parts of the agency, including some of the program areas that Crystal and Samantha were just discussing. So it's really in the agency's interest to make sure they have sufficient resources. So the 10% one-time change management fee is what we're calling it, does require board approval, and therefore we're seeking a motion.
Got it. Thank you. Questions? Will?
Okay, this is before the HTFC board. Resolution is transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. Item 31, Resilient Retrofit Program, Round 3 Awards. Rachel Weeder, Deputy Commissioner, RHC, will present this item.
Hi.
Hi. Good morning, Rachel.
Hello.
Good morning.
We are seeking approval to award 4 community lenders for the Resilient Retrofits program totaling $5 million. Each award is specifically listed in a chart in the materials, but the awards would go to AFI, Asian Americans for Equality, NHS of New York City, Spring Bank, and the Syracuse Cooperative Federal Credit Union. The funding is coming from an appropriation in 25-26 fiscal year budget for $50 million. We put out as a notice of funding availability $5 million to increase the amount of providers operating the program with us. The program is a low interest loan, part low interest loan, part grant that goes to low and moderate income single family homeowners to make climate resilience improvements to their home. We've seen a lot of energy efficiency improvements made as well at the same time, insulation, floodproofing basements, new roofs, things of that sort. I'm happy to answer any questions about the awards.
Thank you. Well,
I'll note for the record that Mr. McIntyre has recused himself from this item now before the HTFC board. Our resolutions transmitted in connection with the item, assuming the motion is second, previously recorded. All in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Great, thanks. Item 32, Move-In New York Awards. Aaron Chilowich, Program Manager, Small and Mid-Sized Development, will present this item.
Hi, everybody. I'm pleased to bring before you the first two awards under the Move in New York program, $15,730,000 for the Greater Syracuse Land Bank and $6,050,000 for the town of Tonawanda. These awards will be used to build and sell 72 manufactured cross-mod homes, 52 in Syracuse and 20 in Tonawanda as affordable homeownership opportunities. Move in New York was launched in late 2025 after a successful pilot project with 3 land banks. The agency issued an RFP for builders of manufactured cross-mod homes, the responses to which formed HCR's pre-qualified list. Soon thereafter, HCR issued a request for applications for land banks, not-for-profits, and municipalities with infill land on which to site and sell cross-mod homes as affordable homeownership opportunities. Just a quick point of definition, cross-mod homes are HUD code manufactured homes built to design standards set by the Fannie Mae and Freddie Mac, such that the homes can be appraised relative to site-built comps and purchasers become eligible for standard GSE-backed mortgage products. So cross-mod homes combine the affordability of manufactured housing with the features, financing, and appraisal methods of site-built homes. For each award, HTFC will enter into a partially forgivable loan agreement for 100% of the site work, unit construction, and unit delivery costs. We're anticipating an all-in cost of roughly $275,000 per unit, including site work, and are budgeting an additional 10% contingency. Awardees will in turn contract with a cross-mod producer from the agency's pre-qualified list, as well as a New York State certified manufactured home installer and site contractor. HTFC's loan will then be forgiven in proportion to the amount of subsidy required to sell the homes at a range of affordable prices by area median income minus the 6% developer fee. And an explanation of how that works is in the board package. Programmatically, all units will be sold to households with incomes from 60% to 130% of area median income, with final income bands and unit pricing to be set individually with each awardee based on market conditions. I'll note that in Syracuse and Tonawanda, the home prices will not go above 110% AMI in Tonawanda, and I believe 90 or potentially 100 in Syracuse. HTFC will require a minimum 10-year affordability period recorded as a subordinate note in mortgage in compliance with the GSE's guidelines for affordable second liens, but HTFC will support longer affordability periods where there is need or awardee interest. The 20 homes in Tonawanda will all be sited in the Sheridan Parkside neighborhood. Sheridan Parkside is in the northwest portion of Tonawanda and was originally constructed as temporary wartime housing. Move in New York presents a significant opportunity for investment in the neighborhood that has the highest concentration of town-owned lots. The 52 homes in Syracuse will be spread throughout the city, but will primarily be located in the neighborhoods targeted by the city's Insurgent Neighborhoods Initiative. This initiative's infill housing development strategy calls for 200 new units of affordable single and two-family homes in scattered sites throughout the city, which will be significantly progressed via Move in New York. We anticipate construction on each of these projects could begin as soon as the early summer of 2026, with the first home sold around the end of the current calendar year. And with that, I'm happy to answer any questions.
Great, thank you. This is really exciting. This is an important initiative by the governor, and it's really great to see this, get rolled out.
Yeah, I'll underscore that, and the pricing is great.
Yeah.
My one question is, when you put out the $275 to have the unit constructed, and then they get a $150,000 mortgage, they pay it back and you recycle that back into the program?
Correct. Aaron, did you hear that? Yeah, correct, right.
Sorry.
No, it's okay. That's okay. I'll just, since you to take credit for the question. So go ahead, Stacey.
Yeah, I just wanted to make sure that the money that gets paid back from whatever mortgage the buyer gets is recycled back into this program so that you can keep
That's
going.
exactly right. So we can do this again and again.
Great, thank you.
Great, thanks. Any other questions? Will?
Now before the HTFC board are resolutions transmitted in connection with this item, assuming the motion second previously recorded. All in favor, please say aye.
Aye.
The motion is carried and the resolution is adopted.
Thank you. Item 33, New York State Small Rental Development Initiative Awards, fiscal year 2026. And Madeline Fletcher, Vice President, Small and Mid-Sized Development, will present this item and the next two. Good morning.
Morning. Hi, everybody. Okay. So this recommendation is for our annual application for the Small Rental Development Initiative. The awards reflect the $10 million that was made available in fiscal year 2026, as well as an additional almost $700,000 in funds that have been repurposed from a project that didn't move forward in fiscal year 2023. We issued a request for applications in December of 2026. They were returnable in mid-February. And nonprofit housing organizations are invited to apply for projects that both preserve or create high-quality multifamily projects of 4 to 20 units. So these are projects that don't really have a lot of other sources for funding. And they are generally set affordable at 80% AMI or below. And we consider project need and impact, development team's experience and capacity, readiness to proceed, as well as their overall financing plan. We will finance up to 80% of the total development cost. We received 15 applications. They are scored by a committee of 3, and then scores are averaged. The top 6 projects reflect a total request of almost $10,700,000. And the details are provided for each of them. The projects total 62 units in 5 counties. 46 of the units are preservation, 16 units are new through adaptive reuse. And they will leverage a total of just over 18 million additional funds in private and other public investment beyond HCR. They're super interesting projects from really strong organizations, and we're happy to recommend them.
Great. Thank you. Will?
Now before the HTFC board are resolutions transmitted in connection with this item, assuming the motion and second previously recorded. All in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. Item 34, Rochester Club Condominium, City of Rochester, Monroe County, AHOP.
Great. This AHOP project is known as the Rochester Club Condominium, proposes to use $7.26 million in AHOP funding for the adaptive reuse of an existing commercial building into 33 condominium units affordable at or below AMI. The project is a mix of studios, 1 and 2 bedrooms, and it will also be the first project to utilize HCR's new Green Small Buildings Program funding, which Samantha and Crystal presented before. The project will use energy efficient heat pumps for heating and hot water. There was existing commercial space on the ground floor, which will be subdivided as a commercial condo as well. The project developer is 120 Redev LLC, which is led by Ryan Benz, who has also successfully developed 2 other affordable AHOP homeownership projects in Syracuse. One, St. Matthews in East Syracuse, which is 21 condos. The other, Loft 1117, which is an adaptive reuse project in the city of Syracuse itself. On those projects, both are complete, and 60% of the units at St. Matthews are sold or under contract. So it's been really successful. Demand has been really strong. So we're excited to see him expand to Rochester. The project is a Class B office building in the Eastern Historic District of downtown Rochester, originally constructed as a mayoral residence in 1860. The prices range from $146 to $167K. To $187K rather. And the homes are priced, again, affordable at 80% AMI. There's a really strong demand for home ownership in the area. There are condos literally across the street selling between $500,000 and $700,000. The homes will be built to DOE efficient new home standards, so super green, qualifying for our bit of subsidy bump that we offer for green projects. The total development cost is $13 million. There'll be financing from CPC, and as well as contributions from the developer. Again, it's the 3rd project by a strong developer, and we're excited to recommend it.
Great. Yep.
Note for the record that Ms. McEwen is recusing herself from this vote. Now before the HFA board, a resolution is transmitted in connection with this item, assuming the motion second previously recorded. All in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Great, thank you. 35, Morsania, Claremont, City of New York, Bronx County, AHOP.
Last one. Morsania Claremont Village requests $6 million in AHOP funding for the new construction of 30 affordable homeownership units across 8 scattered sites in the Morsania and Wakefield neighborhoods of the Bronx. The project will include 1 7-story co-op building as well as 7 2-family infill homes, all of which will be affordable at or below 80% AMI. The developer is Neighborhood Infill Partners, which is a joint venture, an MWB joint venture between JCal Development and Sandra Erickson Real Estate, who together have a large range of experience in development. The project, the development team was awarded this project in 2019 through an RFQ process with HPD, both NIHOP and the Neighborhood Construction Program. The anticipated sales ranges here are between 232,000 and 257,000 for co-ops and 480 to 514 for 2 families. Pricing for the co-ops reflects a 13% discount to market, and the homes reflect a 57% discount to market. Home ownership rates in Morsania are particularly low at only about 5.5%. So we think this is a really great opportunity to create home ownership. The project is about $35 million and will include a loan from Webster Bank. This will be our first loan that we close participating with Webster. And there is also funding from Open Door and ResOA funding coming in from the City Council. Tax exemptions have also been secured to sort of ensure affordability over time. This has been coming together again over a series of years since 2019, so we're happy to recommend it and get it over the finish line.
Terrific, thank you.
Thanks.
Well,
And now before the HFA board, a resolution is transmitted in connection with this item, assuming the motion second previously recorded. All in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. Item 36, remarketing of bonds for related 42nd and 10th Avenue, City of New York, New York County. Mark Price, Director of Capital Markets, is back.
Thank you, Mr. Chairman. As mentioned in the audit presentation this morning, we often work on refinancings for 80/20 projects. This is one of them. This particular project is located at 450 West 42nd Street in Manhattan. The developer is related. And the project basically has 2 towers. One tower has 590 apartment units, including 130 low-income units, plus 75 condominium units, 33 of which are for low-income individuals. The residential units began leasing in 2011 and are currently 99% leased. This is a request to approve a supplemental resolution to amend the existing bond documents. This is to facilitate a remarketing of existing bonds. This isn't new money or a new project approval, but simply a change of the existing bond mode. The project was originally authorized in 2007. We ultimately issued $350 million of bonds across 3 series. Today, $320 million remain outstanding. They were originally sold as variable rate bonds in the public market and were at one point backed by Freddie Mac. As of 2022, are in a direct purchase mode held by Barclays Capital and supported by a Barclays bank letter of credit. If approved, the bonds will be subject to a mandatory tender and remarketed with a new Barclays letter of credit for a 2-year term. At the end of that term, the borrower and the bank could renew, substitute another facility, or move into a private placement. The final bond maturity remains the same, allowing us to continue to earn $400,000 annually in a servicing fee, and HFA will receive $1.2 million in a refinancing fee. Happy to take any questions.
Is the amount of refinancing just for the principal outstanding, or is there cash back?
Yeah, we don't typically do like a cash out refi. for these borrowers. If they're going to do something like that, they're getting lending away from us. But no, this is 320 million is outstanding, and we're just remarketing bonds that are
Gotcha. So
outstanding.
there's no capital available if they need a roof or a boiler or something.
Yeah, so there's usually an assessment that's done in terms of capital needs or anything like that, and it seems like the project's in good state.
Great, thank you, Mark.
Now before the HFA Finance and Program Committee and the HFA Board, a resolution is transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
The motion is carried and the resolution is adopted.
Okay, 37, Church House on Seneca, City of Buffalo, Erie County Small Building Participation Loan Program. Burke Blackman, Director of Distressed Asset Initiatives, will present this item. Burke.
Hi, everyone. This is a request for just over $2 million in small building program subsidy to fund the adaptive reuse of the vacant historic South Presbyterian Church complex at 1782 Seneca Street in South Buffalo. The project will create 15 apartments affordable at no more than 80% AMI and also preserve just under 10,000 square feet of historic sanctuary and gymnasium space, leasable to a new congregation or nonprofit tenant on a zero-profit basis. The property dates to 1923 and was continuously used for religious worship until 1993. More recently, it served as the headquarters for the Buffalo nonprofit Harvest House for several decades before they moved to a larger facility and sold the property to the developer in 2024. The newly created units here will be a mix of 1, 2, and 3 bedroom apartments with initial rents affordable at an average of about 66% AMI. Tenant amenities will include 17 off-street parking spaces, bicycle storage, and in-unit laundry. The developer is an integrated Buffalo-based firm that is new to the agency but has completed numerous rehabs and currently owns and/or manages 90 units. Other financing here includes a construction and permanent loan from CPC, of course, over $1 million in historic tax credit equity and owner equity and deferred fee. The project also enjoys local support in the form of a $500,000 American Rescue Plan grant from Erie County. And the project will utilize a 444A partial tax exemption over 10 years for the rehab of historic property. So in summary, this will revive a prominent landmark in South Buffalo, provide much needed housing for families, has support from Erie County, and is seeking a per unit subsidy here that's significantly below what we have recently seen for projects. So $137,000 per unit versus our max of $150 per unit. And we're happy to recommend it for funding.
Thank you, Burke.
Note for the record that Ms. McEwen has recused herself from this vote. Now before the HFA Board, a resolution is transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
Aye. The motion is carried. The resolution is adopted.
Thank you. 38, Manufactured Home Advantage Program Award for the High Meadows Manufactured Home Community in Dover Plains, Dutchess County. Burke.
Thanks. This is a proposed award of approximately $2.6 million from the Manufactured Home Advantage Program to nonprofit Hudson River Housing to assist the resident-owned manufactured home community in Dover Plains known as High Meadows. The funds here will be used for the emergency replacement of a failing wastewater treatment plant with a new pre-built package plant, as well as pre-development work in anticipation of a later application by the community to HFA's Manufactured Home Cooperative Fund program to complete additional capital improvements. So this current award is being requested on an emergency basis to address urgent health and safety issues arising from the on-site sewage system that, if unresolved, risk the community's closure by the county's Department of Health and displacement of 162 households. As background here, High Meadows is a resident-owned community that converted to cooperative ownership in 1992 with the assistance of HFA's Cooperative Fund. It consists of 203 permitted home sites on 64 acres, 162 of which are occupied, mostly by homeowners. The community paid off HFA's loan in 2013 and is not presently in the agency's portfolio, but did come to our attention in late 2023 as its current lender, CPC, approached us about possible infrastructure funding to remedy the park's ailing well water system, which is not the subject of the current request, but has been a significant problem for the community. The system had several outstanding Department of Health violations relating to insufficient volume to meet daily demand, which is an ongoing problem, as well as broken or leaking equipment and distribution lines. The cost of trucking in additional water and near constant repairs to systems has resulted in the community drawing down its reserves and falling in arrears on the CPC loan. CPC's loan has a current outstanding balance of approximately $2.4 million and is SONYMA insured. SONYMA has contemplated purchasing the loan from CPC's investor in order to help facilitate a workout, but that has not yet occurred. In early 2025, at the agency's suggestion, this community engaged Hudson River Housing for technical assistance to help find a new water and sewer operator, investigate the full scope of infrastructure needs here at the community, and assist with improving overall property management, as this community has been self-managing for some time. This last July, we provided Hudson River Housing with $40,000 in MHAP pre-development funds to undertake engineering investigations, flesh out a proposed work scope, and estimate costs of required capital improvements. The completed physical needs assessment identified significant needs, as you can imagine, including a new water treatment facility, additional wells, full replacement of the water distribution lines, as well as the new wastewater treatment facility, road repaving, and a few other minor items. We'd been preparing for an additional pre-development request to enable Hudson River Housing to undertake the design, bidding of site work, and permitting for the full infrastructure overhaul, but unfortunately, conditions at the wastewater treatment facility have recently deteriorated despite the new operator's best efforts to keep the system operational. The older gravity sand filters are failing, which results in occasional flooding of the overflow tanks and sand filter bedroom, and it's just a real mess. So to remedy the situation, the operator and Hudson River Housing's engineer recommend immediate replacement of the existing facility with this new package plant, which is purchased pre-built and can be installed on a concrete pad and connected to the existing system, and will help avoid any disruption in service. The proposed emergency funding of $2.6 million would allow Hudson River Housing, on behalf of the community, to proceed with this purchase, as well as the permitting and the site work to get it installed. They'll also undertake the additional pre-development work to prepare for the anticipated co-op fund application later in the year to cover the well water system and other work. And this award will obviously help immediately stabilize the community, and then together with the future anticipated improvements, should reduce ongoing repair and trucked water expenses to enable the community to get current with the SONYMA insured loan. And I'll say Hudson River Housing has really played a heroic role here in navigating between the Department of Health, DEC, and the sewer operator to keep the community open during this critical time. So that's the gist of it. Happy to answer any questions.
Thanks.
Thank you, Berg. It's quite the tale. Yeah.
One question is, will this, I mean, everything's being divided by 203 in terms of, but it seems like there's 41 vacant lots. Will this help address that, and will that help in the stabilization of the property, like actually putting those 41 lots back out to the market? Or is there a reason that those 41 sort of have sat vacant?
Infill would help, and overall community conditions are such that it probably discourages additional residents from moving in. So yes, we are definitely anticipating that the full infrastructure overhaul could help attract additional residents. But again, really the current issue is the ongoing expenses just to keep the systems afloat with constant repair, and then having to truck in additional water just to meet the need. That's really what's resulted in its precarious financial situation. So if we can, get the water systems as well as the sewer system, in good working order, they should have more net income to get current, but also to afford any future agency financing.
Great. Thank you, Burke.
Yep.
A note for the record that Ms. McEwen has recused herself from this vote. Now before the HTFC board, a resolution is transmitted in connection with the item. Assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
The motion is carried and the resolution is adopted.
Item 39, CDS Meadowside Apartments, City of Fairport, Monroe County, and Yuting Zambudo, Vice President, Multifamily Finance and Development, will present this item. Hi.
Thank you. Morning. I'm presenting a recommendation for the acquisition and rehabilitation of CDS Meadowside Apartments. This is 69 units of affordable senior housing in Fairport, Monroe County. This is actually the opportunity to bring back online 69 units. So not just the preservation, but these units have become vacant because the current operator has become defunct. So CDS Monarch, the new owner and also the supportive services provider, has negotiated the purchase of this property for an appraised value that has been substantiated. The rehab is comprehensive, sustainability focused. Beyond full interior renovations, they're doing exterior work, roof siding, windows, accessibility upgrades, and the heating will be fully electrified. On financing, HCR is recommending $9.2 million in subsidy. This is coming from both HTFC as well as HFA. This is layered with a CPC construction and first mortgage loan, CPC and permanent loan. The permanent loan is insured by SONYMA. This is also combined with $6.5 million of state low-income housing tax credit equity, as well as a contribution by Monroe County. Happy to answer any questions here.
Thank you. Yep. Questions? Well,
Okay, note for the record that the chairman and Ms. McEwen have recused themselves from this vote. Now before the HFA and HTFC boards are resolutions transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried, the resolution is adopted.
Thank you.
Our next project is also a supportive housing preservation project. It is Columba Kavanaugh House, which is a portfolio of 6 supportive housing buildings in Harlem, New York City. The project is being developed by Sisters of Charity, a nonprofit who's also the supportive services provider and also has an affordable housing portfolio before the agency already. This project addresses 3 of the state's priorities. First, it preserves supportive housing for the state's most vulnerable populations. So these are the residents with serious mental illnesses, substance use disorders, and the chronically homeless. Second, it meets one of our hardest goals. So when we started the supportive housing preservation program, we had to set aside for SRO conversions. We are targeting the SRO conversions here by converting 110 SROs into 55 studios. Third, it advances our sustainability priorities beyond the comprehensive rehab, which is everything you would expect from kitchens, bathrooms, plumbing, electrical, windows. We are also going above and beyond. They're converting all of the gas to electric cooking, and the Columba Hall SRO conversion is actually going full electric with the exception of domestic hot water. On financing, HCR is recommending $42.6 million in subsidy. This will also be coupled with, a major contribution from HTFC with its Clean Energy Initiative program. LISC is providing the construction loan, and a first mortgage loan is being provided by NICERS, originated by CPC, and then also insured by SONYMA. I'm sorry, and then one last add, just like a contribution by HPD, which was fairly significant here. Not only are they on at the table with the tax exemption, but they are also providing a 15/15 award for rental and operating services, which will really made the first mortgage lending possible. Happy to answer any questions.
CPC or LISC? That's originating. Yeah.
LISC is originating the construction loan. CPC is originating the perm loan. And apologies, I may not have flagged that previously. Sorry, thank you.
Thanks, Chief. Well,
I'll note for the record that Ms. McEwen has recused herself from this vote. Now before the HFA and HTFC boards are resolutions transmitted in connection with this item. Assuming the motion second previously recorded, all in favor, please say aye.
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 Thank you.
Thank you.
The motion is carried. The resolution is adopted.
Thank you. Item 41, contract with Paper Return Solutions Incorporated for electronic record system solution, and Betsy Mallow, Executive Deputy Commissioner and COO, will present this item.
Hi again. I have a very straightforward contract approval, but before I do that, I want to acknowledge Lisa Pagnosi. Lisa Pagnosi is retiring next week as our Vice President of Contracts. 28 great years. Well, I'll say great years at the agency. I haven't been there for all of them. But obviously someone you know who can come up to any board meeting and answer any question we possibly would have of her. And behind the scenes to us, someone who works just incredibly, incredibly hard, one of the hardest working people at the agency. So thank you, Lisa. I don't think this is even on. I don't think can you hear me? This is just for you. All right.
They won't hear you.
This isn't for them.
Well, there's some board members there, right?
Can you hear me?
Thanks, Betsy.
Remotely? Okay.
Thanks for emphasizing the importance of those who are in Albany.
Okay. No, sorry. My fault. Can you hear me? It is then working for you. Apologies. Okay. Back to the contract with Paper Alternative Solutions. As some of you might remember, when we renovated 641, we moved to a more modern system of document retention. And this is just the normal course of reissuing that RFP. And actually will enable hopefully a cost savings to the agency, because the rates that we're going to get from Paper Alternative Solutions for document storage are lower than the rates that we are currently spending. So I'm asking members to approve a contract with Paper Alternative Solutions for a 5-year period with 2 optional 2-year renewals and 1 optional 1-year renewal in an amount not to exceed $2,302,068. I should also, by the way, just take an opportunity to introduce Malini Pons sitting next to Lisa, who will fill Lisa's big shoes. Any questions?
Couple questions. First, acknowledgement. Lisa, like, amazing. For people like internally, she's amazing and lead source, and just so thank you. This is obviously to replace queso. Is that correct?
It's to replace part of it, though.
Okay.
So there are 2 parts. There are 2 parts. One is the back-end document storage, and the other is the scanning.
Got it.
This is replacing the back end, and we're going to bring the scanning portion to a future meeting.
Okay. Do you have a sense, does this all make stuff machine readable, like the scanning process, just in terms of like our ability to obviously digest crazy quantities of documents? Does this actually support making documents machine readable?
It's a very good question. I don't know the answer. And we've stumped Lisa on her very last day. I will get you the answer.
Okay. Yeah, I mean, obviously, you know, we had the introduction on the AI and other things, and just our ability to digest documents at scale is an important factor, and obviously electrifying.
It's a great question, and I apologize that Tim, who would be presenting this and might know the answer, is traveling today, so it's your buff. I'll ask.
Thanks, Betsy. Anything else? Well.
Okay, now before the, I believe this is before the full boards.
Governance.
Yeah.
Governance.
I'm just looking at the resolution.
Governance can be only here.
Yeah. Well, we'll vote on it for the whole board. For the HFA and the HTFC boards, our resolutions transmitted in connection with this item, assuming the motion second previously recorded. All in favor, please say aye.
Aye. Aye.
The motion is carried and the resolution is adopted.
Okay, the next 4 items are SONYMA items, which we will skip until later. Items 46 through 58 are consent items. Will, you want to just do those?
Okay, yes. Now before the HTFC board for items 46, 47, 48, before the HFA board for item 49, before the HFA board audit committee for item 50, before the HFA governance committee for item 51, and before the AHC board for item 52, 53, 54, 55, 56, 57, 58. Our resolution transmitted in connection with those respective consent items. Assuming the motion second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. And then items 60 through 71 are information only, so there's no presentation. And
so I want to note for the record, we expect at this point, and note for those who may be watching, we expect to establish a quorum of the SONYMA board at 2:30 this afternoon. We are losing our Capitol location. So any members of the public who wish to view the Sunny May board member and are in Albany, please join us at the Hampton Plaza location, which is just down the street from the Capitol. So we expect to establish a quorum for the Sunny May meeting at 2:30, and the Sunny May board will consider the items on the agenda that include resolutions for it at that time.
Okay.
So now, assuming the motion second previously recorded, all in favor of adjourning the remaining meetings, please say aye.
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 The motion is carried and the meetings are adjourned.
Great. Thank you.
Thank you.
Thank you.
everyone.
Thanks. To begin, we note the following. We are joined by Jesse Olzak, representing the Director of the Budget, participating via video conference from HCR's Albany office at Hampton Plaza, 3840 State Street in Albany. We're also joined by B. Gonzalez, participating via video conference from HCR's office in Syracuse at 620 West Erie Boulevard, Suite 312. According to the open meetings law, notice of our locations has been made public, and the public has the right to attend and observe the meetings from these locations. We'll now do a roll call for each, for the Sunny May meeting, and use these votes as items are considered unless a board member indicates an intent to vote differently or a need to recuse. To open the meeting of the State of New York Mortgage Agency, ask for motions and seconds to call to order, consider each agenda item, and later adjourn this meeting.
So moved.
Second. Now ask for individual votes from members of the Sunny May board, starting with Chairman Weiss.
Aye.
Commissioner Wisnauskas.
Aye.
Mr. Olzak.
Aye.
Mr. Freeman.
Aye.
And Ms. Gonzalez.
Aye.
Thank you. To open the meeting of the Sunny May Mortgage Insurance Committee, ask for motions and seconds to call to order, consider each agenda item, and later adjourn this meeting.
So moved.
Second. To open the meeting of the Sunny May Audit Committee, ask for motions and seconds to call to order, consider each agenda item, and later adjourn this meeting.
So moved.
Second. And to open the meeting of the Sunny May Governance Committee, I ask for motions and seconds to call to order, consider each agenda item, and later adjourn this meeting.
So moved.
Second.
The meetings, for the individual votes of each committee member will accept the previous votes. The meetings are officially open.
Okay, terrific, thank you. All right, so we'll move into item 2, the approval of the meeting minutes, which will be deemed approved absent any objections or corrections. Item 3, the financial statements for fiscal year ending October 31, 2025. We've got a presentation first by our new accountants, Clifton, Larson, and Allen. And they will be joined by Ted Podest, Sonia Kinkle, Daryl Johnson, Mark Price, Darrell Ford, and Mike Friedman.
Okay, I think it's on. Can y'all hear me?
Yep.
Okay, awesome.
Yeah,
So I think I introduced myself to everyone but you. So I'm Gabby Miller. I'm a principal at CLA, the engagement principal over all of NYHCR. So I'm going to skip a few of the slides that I went over earlier. But let me know if you have any questions. I'm going to be more specific just to Sunny May.
Let's please go through the slides that are not HFA related, so this is what CLA.
Okay.
The early strategy.
Okay, you still want me to do? Okay, awesome. Okay. So as your new auditor, we like to kind of give y'all an introduction of who CLA is. So we're a national public accounting firm. We have about 120 offices, about 9,000 people. We are the #1 provider of single audits. So we'll do a single audit compliance of HFA, which you're not on the board of. So, and we also perform the most audits of state and local governments. So we have a pretty vast state and local government team across the country. And we also perform the audit for 15 state housing finance agencies. So me and Mandy, who was here previously, we're head of the housing group across the country. So very familiar with HFAs and those operations. So next up, I'll go over the agenda real quick. So I'm going to go over the audit scope and the process, the audit opinions and governance communications, the engagement finalization, so what's left before we issue the financial statements. And then, do you want me to talk about the upcoming GASB standards too? Okay, everything? Okay, awesome. Okay. So for Sunny May specifically, the audit scope, we issue our independent auditor's report over the financial statements for the year ended October 31st, 2025. And that is where we provide reasonable assurance that the financial statements are not materially misstated. So I always like to say we don't look at every single transaction, but we do have a materiality threshold and have our audit approach is risk-based, which I'll talk about in a little bit. We also have a report on internal control over financial reporting and compliance in accordance with government auditing standards. So that's where if we had any findings or issues related to the financial statements, that finding would be disclosed there. We also have our required governance communications letter, and then also our internal control and management letter, and that's where we'll have recommendations to management that didn't rise to a finding or significant deficiency, but just kind of recommendations that we saw throughout our audit. And then lastly, for Sunny May, we have our investment report where we look at, make sure the investment policy and the investment transactions are in accordance with the New York state law. Any questions on the scope? Nope. Awesome. So next up is our audit process. So like I said, we have a risk-based approach. We're not looking at every transaction, but we do look at the financial statements for Sunny May and tailor our audit approach accordingly to what seems significant for those financial statements. As part of our audit process, we performed a test of internal controls where we looked at general disbursements, journal entries, loan disbursements, as well as loan receipts. So we did a very comprehensive review of the controls over those processes, and there were no issues, no findings there. So that's really great. As part of our audit process, we also look at significant estimates, and the main significant estimates for Sunny May is allowance for loan loss, so making sure that the receivables are not overstated, that management is looking at the collectability and any delinquencies on those loans and making sure that they're allowed for. And we also looked at the allowance for anticipated claims. That was one of our biggest deep dives for Sunny May, and we saw no issues over both of those items. And inherently to all governments, significant risk includes revenue recognition and management override of controls. Just making sure there's no fraud occurring, no overstatement of revenues to make the bottom line look better. So we do kind of keep that in mind and have higher testing over those items. We also looked at the debt and covenants as well as cash and investments. We did a lot of confirmation procedures over the bonds, the cash and the investments, and saw no issues there. Any questions over the audit process? Okay, awesome. Next up is the audit results. So for Sunny May specifically, our opinion was unmodified, so that's the best opinion you can get. That means that we believe the financial statements are free of material misstatements, so it's really great. It's kudos to the team. For all the agencies actually was unmodified, so it's really great. As far as audit results, there are no material weaknesses or significant deficiencies, so no findings or issues there. So next up is our required governance communications. So like we always like to say, management takes overall responsibility over those financial statements if they've reviewed them, that they're comfortable with them, and we do review to make sure they're in compliance with government auditing standards as well as GASB, which is the standards board for the financial statements. And there were no issues there. We think everything is in compliance, so it's really great to see. And as far as audit difficulties are concerned, there were no audit difficulties for Sunny May or any of the agencies as well. And like I said previously, we looked at the estimates specifically for Sunny May, those allowances, and saw no issues, no management bias.
So those are estimates that we create
Yes.
and you review.
Yes.
So you just confirm that what we've estimated is.
Yep.
in
Yep.
line.
So we'll look at reports specifically for allowance. We'll look at delinquency reports and make sure that, specific loans aren't considered delinquent and that there's no allowance for them.
Thank you.
Yep. And then another estimate that I didn't talk about previously was the fair market value of investments and derivatives. We have a third party, software where we'll give them the inputs and they'll compare against the bank, the confirm from the bank, and make sure that they're reasonable. Sometimes there's normally very immaterial variances just based off of the valuation methods that they use, but there's nothing of concern there. And then as far as Sunny May specifically, we do have to let you know about the past adjustments. So those are adjustments that are over our lowest materiality threshold, but under our highest materiality threshold. So where we talked with management to see if they wanted to make adjustments And because they're under that highest materiality threshold, we didn't have to make adjustments, but we do need to let governance know. So for Sunday, May, there were there's one past adjustment, and then a couple of disclosures that were not in the financial statements. The past adjustment was related to derivatives. There was about a 13 million discrepancy between the report and what was on the financial statements. It was corrected in the current year, but because it was prior year discrepancy, we did not go back to prior year equity and make any changes or restate the financial statements. But as of 10/31, everything has been corrected. And then as far as the past adjustment disclosures, so those are items that are on the financial statements where there's not a footnote in the financial statements. So those were capital assets and then the lease liability disclosure. So lower than our top materiality, but higher than our lowest materiality. So normally we would see a disclosure for those.
Correction reviews are done annually?
Yes.
And then lastly is our steps to finalize the engagement. So I'm having the board approval now. Our audits are going through our quality review. So we have a national group specifically to state and local governments that do that last final check to make sure the financial statements are in accordance with GASB and that our audit work papers are complete and back up the financial statements. So SONYMA is currently in that review right now. We don't anticipate any major changes, maybe some wording here and there, but nothing that from the financial statements that y'all have looked at. After we obtain that quality review, we will get the management representation letter. And that's just management opining over the financial statements, that everything in the financial statements is accurate and nothing is materially not included. And then after that, we'll be able to issue, and then management can submit to all of the required users of the financial statements. And then another item that we've been helping with SONYMA is the bond issuance letters as required by the underwriters. So as those bond issuances come up, we are doing our procedures that they would like us to do. And then one more thing, sorry, there's upcoming GASB standards that we just like the board to be aware of that are required to be implemented next year. So the biggest one is going to be GASB 103. That is one of the biggest GASBs in the past couple of years that are required. The biggest change will be in the MD&A, or the management's discussion and analysis. They just want all agencies to kind of have more uniform MD&A. So there's just a few changes that you'll see next year that we will go over. We'll kind of do a comparison next year to show what was included in the MD&A last year and what will be included next year. And then also there will be a change to the statement of revenue, expenses, and changes in net position. That's going to be the biggest change. It's moving some items from operating revenues and expenses to non-operating. And then there's an additional line for non-capital subsidies. So a lot of those grant monies might be included in that line. And we'll definitely explain that next year because it is kind of a significant change when you're comparing to prior years. And then GASB 104 is related to capital assets. So like I said, that is not just currently disclosed in the financial statements, but if management chooses to include it in next year, we'll make sure that it is in accordance with GASB 104. And then in 2 years for fiscal year 27 is GASB 105 related to subsequent events, just making sure everything that's required to be disclosed is disclosed. And that's mostly bond issuances for all the agencies. That's mostly going to be those disclosures in the footnotes.
Thank you.
So,
Great.
that was it. You have any questions? Okay. Awesome.
Thank you very much. Ted, do you want to?
I just want to officially thank CLA and Gabby. You know, we started about 10 weeks late on the audit, and they didn't let up. They asked great questions, great reviews, and really kept us on our toes. So I just want to thank them for being great partners.
Thank you.
Thanks y'all and the team. Y'all are very responsive, and it was a good first year audit.
Great.
Great. Thank you.
Thanks. Thank you.
Good birthday.
Please catch your train.
Yes. Okay. Thanks everyone.
Thank you. Thanks for staying.
Mark, Durrell, and Mike
Yeah,
are going to
thanks.
come up. We're going to now take you through the financial statements and program summary.
So there's a PowerPoint on the laptops. It
It's
is.
the supplement. I think it's the first item.
Oh, yeah, and it's on the
Awesome.
screens also. I have it as number 3 on my, in
great.
my thing. I don't know if they're all
I'm
different.
sure you're right.
I don't know.
Okay.
So if we could just go to page 2, I'm just going to spend a minute in talking about the financial statement takeaways.
So let's focus primarily on
Yep,
SONYMA and
exactly.
if there's,
So you can just go one more page.
Great.
There we go. Perfect. Excellent. Basically, SONYMA's net position, which is like its P&L, has increased 220 million. Last year, it increased 201 million. The primary reason is interest on loans, investment income, mortgage recording tax. Outstanding bonds is 3.3 billion, but Mark is going to take you through those sections. So if you have any questions on just the overall net position change, I'll move it over to Mark. Sorry, Mike.
Sure. Thank you, Ted. Good afternoon, everyone. So if we move on to slide 4, yes, perfect. Just to contextualize what's been going on in the bond markets, where we issue debt for SONYMA to fund our programs. So in 2025, municipal bond issuance increased by 5%, and that follows a decrease in overall rates. The chart on the left shows that slight increase from 2024 in issuance. And on the right, you'll see the interest rate environment. And so if you go back to 2021, where we were in a very low rate environment, things ticked up a lot in 2022. And finally, in 2024, we saw rates starting to come in a bit. And last year, 10-year Treasury decreased by 39 basis points over the year and ended the year 61 basis points lower than the highest rate during the year. So a favorable interest rate environment, certainly not the one that everybody's hoping for, but it's getting better, and one can only hope that it continues to do so. If we go to the next slide, for housing issuance specifically in 2025, overall housing bond issuance was up by 7%, but for single family, which SONYMA is a single family issuer, it was little changed from the past year. So steady sort of issuance there in terms of the single family bond issuance. If we go to the next slide, overall for HCR, we were the #1 housing bond issuer in the market. We tend to be one of the top issuers. We've been a top 3 housing bond issuer over the past 3 calendar years, which means we continue to be able to access the capital markets very easily, which is quite helpful for funding our programs. The charts to the right show sort of the differences in the issuance from year to year, specifically for SONYMA, the yellow, we have not advanced one more slide. Oh, perfect. So the charts on the right, the yellow portions of the bars represent SONYMA, and you can see that the issuance has been steady and down slightly over the past year. Okay, we're moving forward. No problem. I'm taking the message. Oh, no, I'm sorry. If we can go back
2 or 3
to one more. Perfect. Okay, and I'll just focus on the bond program accomplishments for SONYMA. We continue to maintain a very strong rating for the bond program that we use the most, which is our homeowner mortgage revenue bond program, and that maintained a AA1 rating from Moody's, which is the second highest rating that the agency gives for bonds. We continue to issue bonds labeled as social bonds, given the fact that we are making loans to first-time home buyers and having that social impact. And then we're trying to do our best to preserve some volume cap by doing replacement refundings and being efficient with the use of tax-exempt authority that we have. So those were, that covers the bond market and overall bond program. Happy to take any questions on that before we move forward.
Thanks, Mark. Questions?
Okay, so if we can advance a couple more slides. Perfect. So we do issue some variable rate debt for SONYMA, and we have about 525 million variable rate bonds outstanding. That represents 16% of all of our debt outstanding. That's well within our debt policy. Our debt policy is 25% variable rate debt. So we are trying to be prudent with the amount of variable rate debt that we issue. Obviously, variable rate debt comes with more risk than fixed rate debt. And so we try to manage those risks by having a diversity of certain suppliers of support for that variable rate debt. The first set is liquidity providers. These are banks that stand by to purchase our variable rate bonds if during a remarketing process, which usually we remarket our variable rate bonds weekly. If for some reason there's a failed remarketing, we have several banks that stand behind that debt ready to purchase on our behalf until we can have a successful remarketing. And you'll see we have 5 different liquidity providers, and no provider provides more than 30% of the variable rate debt outstanding. So that's well diversified, and all those providers are in the top 2 ratings categories. And then we have swap providers as well. We do try to manage our interest rate exposure by entering into interest rate exchange agreements to essentially convert the variable rate exposure into a fixed rate exposure. And 91% of our variable rate debt is hedged. And you'll see that our swap providers, we have 4 different ones. And again, we have some diversity there, but all highly rated, all in the AA category. Any questions?
So of the liquidity, the 233 million, 218 million of that is covered with a swap agreement?
You're on HFA.
Yeah. Yes.
Wrong slide,
That's
sorry.
okay. Go to the
Yes.
Okay, same question,
Yeah.
different.
Just the numbers.
Yeah, so I'm just, so the liquidity is covered through like letters of credit?
Yeah, so for the most part, they are standby purchase agreements.
But these 2 amounts are related. The 524 is the total amount of liquidity, and of that, 478 is.
Yes. So all of our variable rate debt is a type of variable rate debt that requires a liquidity facility. So the 525 million is the exact amount of variable rate debt that we have outstanding, and we have liquidity providers for all of that. And then of that 525 million, 479 million is swapped or hedged. Yes. Okay. So 91% hedged.
Got it. Thank you.
And it's purposely capped at 30% to spread it across the board?
No, not purposely. We try when we are when we get new liquidity facilities in place, we look at creditworthiness, and we also look at cost, and so we take those things into account plus concentration risk. So we could be in a place where we have a provider that comes in with a very low cost of liquidity, but if they were already a large portion of the portfolio, we may go to a slightly higher cost provider to maintain, to balance it out. Exactly. But we don't have a particular cap, because at the first one we did out of the gate, by definition, it was 100% concentration risk. So each subsequent one we take it into account. Okay. And then moving to the next page, on page 10, this just shows the yellow bars again represent SONYMA. Why do we do this variable rate debt? I just talked about we have to do all these things to manage risk. The reason why we do it is we can get to a lower overall interest rate, and you'll see that these bars represent the cash flow savings that we've gotten versus a theoretical fixed rate cost of debt had we done the debt like that. And so you'll see as of last year that saved us $50 million in interest. Okay. If there are no questions there, actually that concludes what I had. So
Great,
I will
thank
turn
you.
it over to Darrell.
Thanks, Mark.
Good afternoon, everyone. So the SONYMA Single Family Program focuses on providing opportunities for affordable home ownership to first-time homebuyers, veterans, and those who are looking to invest in target communities. We have 3 primary programs: our Achieve the Dream program, which is aimed at homebuyers at 80% AMI, 80 or below, and our low interest rate program, which is aimed at homebuyers above 80%. And if we could just advance the presentation to slide 18. Right after please advance a little bit further, right after the State of New York Mortgage Agency Annual Homeowner.
There we go.
One more, perfect. Back 1, please. Okay, all right, thank you. Our 3 primary programs, the Achieve the Dream, is for households at or below 80% of the average median income. Our low interest rate program, which is for households above 80% of the average median income. And we have a partner program with Habitat for Humanity, which is aimed at homebuyers that are eligible under the Habitat nonprofit program. If we could advance the slide. So in fiscal year 2025, SONYMA purchased 1,428 loans totaling $372 million in primary mortgages. It is down slightly from fiscal year 2024, in which we did 1,796 loans. When you break out that loan volume across our 3 programs, the Achieve the Dream program, which is the vast majority, we purchased 1,159 loans totaling $283 million. Under the Habitat program, which is being retired, we only purchased 26 loans under that program, totaling $4.5 million. And last but not least, the low interest rate program, we purchased 243 loans totaling $86 million. Approximately 74% of all SONYMA loans receive down payment assistance, and that down payment assistance is forgivable, at least in fiscal year 2025, and we provided $19 million in down payment assistance. Approximately 97.3% of the SONYMA loans in our portfolio performed well, and we have a very slight delinquency rate below the New York State average. If you take a look at the chart to the right, you can see that affordability has become really a challenge for first-time homebuyers as we look from 2022 to 2025 for the same average home, which was $230,000 in 2022, and slightly more in 2025 of $259,373. The average monthly payment is approximately $600 more. So not that much more in terms of the home that they are purchasing, but between increased interest rates, there's just a lot, it's just a higher bar for, in particular, our home buyers. And as you can see, we've put the average down payment assistance, and SONYMA has responded by providing more down payment assistance to help our home buyers and keep their primary loan down. And you can see that in 2022, the average down payment assistance, which was provided by SONYMA, was $8,456. And in 2025, it was $12,553. And so we have expanded our down payment programs during that period. Our standard down payment assistance program is capped at 3% or $15,000. per transaction, and that is available to all of our home buyers. And when possible and there's funding available, we have expanded it to $30,000 when that is available. And as we advance to the next slide, we'll talk a little bit more about what else we are doing to help our home buyers. But as we look at, missing a process slide. Oh, okay, sorry. So some of our initiatives or priorities are helping low-income households. And in fiscal year 25, we purchased loans for 72% of our home buyers were below 80% AMI. And so we've done that by keeping costs low, our interest rate lower than the marketplace. And so that continues a trend that we have. We were able to do a little bit more in 2022 because the interest rate environment was with us. We also, as a focus or priority, serve minority homebuyers in fiscal year 2025. They represented 45% of the loans that we purchased, and that was through the introduction of a program that was aimed to help those households by targeting areas where they might have ordinarily been denied. And so you can see that the percentage of SONYMA loans that were made to minority households has increased over 2022. And as always, we aim to provide mortgage opportunities in federally designated target areas or high poverty areas. And in fiscal year 2025, 16% of our loans were made in those areas. Any questions before we advance to the next slide? Okay, great. And so if we can go to the next slide on the presentation, some of our initiatives going forward. We are looking to expand down payment assistance. In the latter part of 2025, we introduced our first new permanent down payment assistance program, which increases the amount of down payment assistance we can offer all of SONYMA eligible homebuyers with a repayable option. The repayable second lien can provide up to 5% of the purchase price in down payment assistance at 0% interest with no monthly payment. Homebuyers are required to repay that when the first loan is paid off. So that might mean 30 years. It might mean 10 years if they refinance. But this has been, we only released it in the latter part of 2025, and we already see many of our homebuyers taking advantage of it because it lowers the first or primary lien by a larger amount. Our other initiative is just providing greater program reach. Because SONYMA does not connect directly with homebuyers, we want to make sure that they're aware of this opportunity and the programs that we offer. Ordinarily, we work through our participating lenders, and so we have expanded our social media, our community outreach. We offer a SONYMA newsletter. We have monthly community webinars so that folks can ask questions about our programs and then take those questions to their local lender. And last but not least, and this is actually a really critical initiative, is a technology transition. SONYMA, as the board members may remember, you approved a technology upgrade, and this yes, and this technology will allow the agency to interface more seamlessly with many more mortgage lenders. The agency, we have a number of participating lenders, 60 participating lenders at this time, but those are all lenders that have been dedicated to our program and sort of work with our idiosyncrasies. This technology transition will allow a more seamless and industry standard interface with not just our existing lenders, but we anticipate more lenders participating in the program because we can work within the technology standards that exist today. And so that is it. Any questions about our presentation?
Thanks, Ron.
Difference in the interest rate between the market and SONYMA?
We tend to be about 25 basis point below the prevailing rates, whether it's conventional or FHA. We compare our Achieve the Dream program to FHA, and we are typically about 20 to 25 basis points below. The market has been to say volatile lately, and so we don't adjust our rates as frequently as the market, but we still tend to be a little bit lower. Our partners in capital markets kind of help us with that.
Thank you.
And the forgiveness is the 10-year one, or it's less than the 10-year?
It is the 10-year one. So our standard down payment assistance, which offers the 15,000 or up capped at 3%, or capped at 15,000, not 3%. That is forgiven if the home buyer remains in the home for 10 years, but it is, they don't have to wait the entire 10 years. If they sell the home in 5 years, then half of it is forgiven. Other questions? All right, thank you.
Thanks, Drew.
Please advance to the next slide. One more, please.
It's just an overview.
So the MIF supports home ownership and rental housing in New York State by providing credit enhancement for mortgage loans through various programs, including project pool insurance on single-family loans and primary and pool insurance for single-family loans, and providing mortgage insurance on affordable multifamily housing, special needs facilities, and other mortgage loans made by government entities and commercial lenders. The reference to special needs facilities is to DASNY facilities, and we haven't done those in a very long time because of the Medicaid reimbursement risk. Please advance to the next slide. So this shows that first the sources of revenue for the mortgage insurance fund. And in 2025, we received $141 million in mortgage recording surtax. And this compares with $107 million in the prior year. So it was up about 31%. We also earned $95 million in interest on our insurance reserves because interest rates are relatively high, and $62 million in insurance premiums on our insured mortgage loans. Next slide, please. This shows insurance by loan amount, and it shows that for the past 3 years, that insurance of HFA loans has remained remarkably constant despite the increase in mortgage interest rates and construction costs. It also shows a decline in CPC loans that we insure, and a roughly, well, compared with last year, was a dramatic increase. Compared with the prior year, it's roughly constant. And HTC has surpassed CPC as our second largest insured lender. The next slide, please. This shows insurance by loan amount. And in 2025, for the 10-year period, from 11/1/2015 through 10/31/25, the MIF insured 258 HFA loans on affordable housing with 40,178 units. And over the same 10-year period, the MIF committed to insure a total of 600 loans with 63,402 affordable units. 96% of the loans that we insure are current, with 98.3% of the total insured loan amount. So it shows that the larger loans that we insure, which are HFA and HTC loans, are all current. Next slide, please. So surtax revenue was up 33 million over the prior year. Insured loan amounts, number of affordable units has remained constant despite continued high interest rates and increased construction costs. And HTC has replaced CPC as our second largest insured lender. Any questions?
Thanks, Mike.
Good, thank you.
I'm just going to wrap it up by saying, in summary, both the fiscal side and the program side, show great health, for our public authorities, and they're both strong and stable. So is there any questions for anyone that presented today before we move on?
Technical question for you. The AMI is calculated, it's usually by region. So do you know how wide that region actually goes out to calculate the AMIs? To make it affordable or to consider it affordable?
So
For the
if I
Sunny
can,
May, for the Sunny May
yeah,
mortgages.
if I can, it's by county.
By county?
It is by county.
All right. Yeah, because they have it in the definition as just by region. And that region, say like, one of the things we're going to look at today is like Harlem. Northern Harlem is like, median income is like 600-something thousand. Southern Harlem or Eastern is like 42. So that whole region is combined together.
So it is by county, but the 5 counties of New York City are treated the same.
Okay.
So I do understand what you're saying, that there's variation there, but that is how we calculate it.
That is it. Okay. Thank you.
You're welcome.
Thank you all. Well,
Thanks.
Okay, now before the Sunny May Audit Committee and the Sunny May Board are resolutions that were transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you, guys. Okay, we're going to do 3 consent items, number 4, number 5, and number 8. There's no presentation on these items. Well,
Okay, now before the Sunny May Board are resolutions that were transmitted in connection with the items identified by the chairman. Assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
Aye. Aye.
The motion is carried and the resolution is adopted.
Okay, item 7, remaining annual reports for submission to Paris for fiscal year 10/31/25. Well,
Sure, and as the directors will recall, we approved all of the Paris filings. Paris is the public authorities reporting system that's required for all state public authorities. We approved all filings that didn't involve the financial information at the January meeting. Now we need to approve the remaining filings that included the financial related information so that those can be filed with Paris this month. So that's what this item is providing for. And now before the Sunny May Board, a resolution is transmitted in connection with the item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried and the resolution is adopted.
Thank you. Item 10, cybersecurity review report. Amin Babayeva, Vice President, Internal Audit, will present this item.
Good afternoon.
Good afternoon.
Good, thank you.
Here's the mic.
Uh-huh. So I am asking today for approval of cybersecurity review report that was done based on internal audit plan for 2025. Cybersecurity was reported as one of our high-risk areas for the last few years, and that's why it was included in our 2025 plan. Audit was performed based on, the statistics about the recent cybersecurity events, phishing attacks, and etc. were considered during this review, and of course the standards, IT standards that our organization tried to adhere to a maximum degree, and also ITS's standards were considered, and our objectives were to review and assess the HCR cybersecurity policies, practices, and procedures to ensure compliance with available requirements, policies, and industry standards, to review and assess internal and external cybersecurity practices to identify any potential non-compliance gaps, vulnerabilities, risk areas, and areas for improvement, and to determine if established cybersecurity measures and control strategies are adequate for the organization's current risk profile. So our main conclusion was that organization's current cybersecurity posture is stronger than previously, but there is still areas for improvement that we recommended IT management to consider. And one of these areas is formalizing and documenting cybersecurity strategy and dedicated budget, because their expenses are growing exponentially from year to year, which is not it's not specific for our organization only. Any organization's cybersecurity expenses are growing. So it's absolutely natural given the environment, but we want board and executive management be always aware of that. So no, let's say, additional expense or additional vendor will come as a surprise to you. We also suggested limited cross-functional collaboration on cybersecurity matters with other departments, because it's not just IT matter. Cybersecurity is related to all entire organization. When it's come to phishing attacks, it's a HR element to that. Yeah, absolutely. And we also suggested enhance an annual cybersecurity training and AI awareness practices, because when it's come to the reliance on ITS about their regular training, the materials that ITS has put it in their routine training, sometimes it's outdated. Yeah, and the scenarios and the recent events, they dictate the need for our staff to be aware of that events. So when they will be subject for those type of attacks, they react accordingly. So this is what we suggested, and we hope that management will accept our recommendations.
Thank you. Questions?
Any questions?
Hi, it's Bea in Syracuse. When you say limited cross-functional collaboration, well, I guess the word limited to me sounds negative, almost. It's not very, I would say, increase, develop, build, but help me understand why you use the term limited.
So we are suggesting that IT department include other departments into the, let's say, discussions and decision-making about cybersecurity measures and controls. So it will become less limited. So maybe when I summarize this, I did not change the meaning of the word for the recommendation purposes, but this is what. So right now we think it's limited, and we suggest they change it and include more parties to that decision making.
Thank you. I think.
Yeah.
Thank you. This to me is maybe just the tip of the iceberg around working on that silo issue that I brought up this morning, and looking for ways to be more efficient across the agency and its partner agencies in a way that brings aligns culture across all the components. I think
absolutely. Yeah, because for example, AI. Yeah, AI is a matter of our personnel knowing what is allowed and what is not allowed. Yeah, IT is not fully responsible on training our personnel about what they can do or what they cannot do. They can technically support this portion of the training, but the entire, let's say, awareness, like a distribution of the compulsory training materials and etc., it's more of an HR responsibility, and HR should accept that responsibility and help IT to deal with that matter.
Items are sent into individuals in the building. Is there a scan that goes through that actually checks what's actually being downloaded on the system at all?
What is it?
Cybersecurity.
You mean like if an email has an attachment? Yeah.
Short answer is yes.
Transfer.
Every incoming electronic document is scanned for viruses, malware, those sorts of things. Now, if it's an email that just is a phishing email that says, hey, I'm Ruth Ann, please send money to so-and-so, there's very little that can be done about that other than, and this is where what Honey mentioned about, this is where training comes in, right? Because really awareness and diligence is our best defense against those sorts of phishing attempts.
Right. And the cybersecurity side, the reporting side of it from our partners, we had an issue with that like a year and a half ago, where their security system was breached and certain mortgage documents and information was provided publicly. So have there been items updated to put in place where they have to report to us to let us know that their system had been breached? Because that had went like a year and they had never told us.
Those reporting requirements are in place. In fact, they're not in place by us. Those are in place at a higher level than our agency. Obviously, our ability to control their compliance with those requirements is somewhat limited. But those requirements are in place.
Thank you.
Thanks.
Okay, great. Well,
Excuse me. Thank you. Now before the SONYMA Audit Committee and the SONYMA Board are resolutions transmitted in connection with this item. Assuming the motion second previously recorded, all in favor, please say aye.
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 The motion is carried. The resolution is adopted.
okay, the next two items, Haneem, the internal audit plan and the internal audit strategic plan. If you could just kind of give us just a summary.
Yeah, of course. Two documents. One is a short-term plan for the 2026, subject for approval by the board. Includes compliance reviews, administration reviews, review of our servicer bank, and ad hoc reviews, including and also includes the liaison activity between us and state examiners. So this is a preliminary plan, always subject for update if needed by the board or executive management or any ad hoc event if will need to be prioritized. So that's why we call it initial. And the second document that I'm bringing is for this year. We are not asking for approval. It's more informational. It's more of our long-term and let's say maturity assessment element that is currently required by Institute of Internal Auditors as our standard provider. So from this year, this is a compulsory element for us to have our strategy the same way as we suggested for IT. So we also required to have our strategy and our maturity scale development in order to fully comply with our industry standards, which we are not fully in compliance right now, but we are going toward that, and this document reflects where we are.
Thank you. All right, so we're gonna, 12 is just information, but 11 we need to vote on.
And this is before the SONYMA Audit Committee only, a resolution transmitted in connection with this item. So assuming the motion and second previously recorded, all in favor, please say aye.
Aye.
The motion is carried. The resolution adopted.
Great, thank you. And item 13, SONYMA report of examination by New York State Department of Financial Services for fiscal year ended 10/31/24 and management responses. Neem?
Yes, so this item went to the board members as a separate item because the content of the report belongs to Department of Financial Services, which they require to keep confidential. And I'm only providing a short summary of their scoring that they granted to our agency, and this report is subject for approval by the board. So as usual, it's a routine annual examination that Department of Financial Services perform over operations of SONYMA, single family, plus financial controls, internal controls, internal audit, HR, and legal management. So they cover all the, let's say, service areas, including management and internal audit, plus the operations of single family. So usually their ratings are distributed like this. So 1 is strong, 2 is satisfactory, 3 is fair, 4 is marginal, and 5 is unsatisfactory. And for the last 4 years that I'm here, our scores were always 2, which means satisfactory. And the only element where they granted us 3 was the informational technology. And again, it's not because they saw, I mean, that was from year to year, but this year we were actually in a better place. But at the time when they did the examination, our DR testing was not performed yet, so it was done after the examination started. That's why they still assess us as a 3. But to the credit to the IT department, they were in a better position. They should have kind of assessed better. But yeah, so this is their overall assessment of us, which is constant across the four years.
Thank you. And this needs approval, or is this information?
Approval.
Yeah, I think the board is just recognizing, taking notice of this. Yeah.
Thank you.
Okay, now before the SONYMA board are resolutions transmitted in connection with this item. Assuming the motion and second previously reported, all in favor, please say aye.
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 The motion is carried. The resolution is adopted.
Thank you. All right, we're going to skip ahead all the way to number 40.
Thank you.
Let's see, Columba, Kavanaugh House, City of New York County, and Eugene Zangudo or Michael Friedman are going to present this item.
This item was presented earlier this morning by HFA. From the Mortgage Insurance Fund's perspective, we insure an $18,390,000 local initiative support corporation mortgage. The project has 258 units, including 203 supportive units and 51 low-income units. It's a heavily subsidized project. There's 38.7 million HFA supportive housing preservation loan. There's 3.9 million in clean energy initiative loan. There's the assumption of 3.2 million of HFA debt, HPD debt. In New York City, through its 1515 program, will provide $1.2 million in rent subsidy for 55 units. There's 111 tenant-based Section 8 vouchers. The project is being developed by the Sisters of Charity. It was established in 1998 and has developed and operates 1,275 affordable projects occupied by elderly or special needs populations. Sisters of Charity is a constituent agency of the Archdiocese of New York. The insured loan amount is $71,300 per unit, which equals 25% of the project's total development cost of $284,000 per unit. So this is a relatively efficient rehab project. The project will break even with a 10% vacancy or collection loss.
Thanks, Mike. Yeah, question?
I like it. It's 20% energy savings, and they're willing to do relocations as well in place. And I like that they have a suite set up too to be able to put people out and renovate the building. So looks good.
Good.
This item is before the now before the SONYMA Mortgage Insurance Committee and the SONYMA Board are resolutions transmitted in connection with the item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried. The resolution is adopted.
Okay, we're going to skip item 41 for a moment. Mike will let you run through 42 through 45, and then we'll come back to 41. Okay? Item 41, contract with, item 42, Green Avenue Plus TPT, 3 scattered sites, City of New York, Kings County.
So this comprises insurance of a $3.2 million local initiative support corporation mortgage for the rehab of 3 properties with 44 units. They are all low income, all affordable. Well, they're actually affordable for a range from 40 to 85% of AMI. They're predominantly 3-bedroom units. There's a $23 million in HPD sub-debt, which works out to $523,000 per unit. There's a 420C exemption on one of the buildings and Article 11 exemptions on the other 2. The project is being developed by St. Nick's Alliance, which was organized in the mid-1970s and has developed more than 950 units of affordable housing and manages more than 1,600 units. This is the 3rd loan that we've insured for St. Nick's Alliance with total exposure of $11.5 million. The insured loan amount is $73,000 per unit, which equals 12% of the project's total development cost of $627,000 per unit. So this is a rather expensive rehab project.
Thank you. Questions? Well,
Okay, this item is before the SONYMA Mortgage Insurance Committee only. The resolution transmitted in connection with the item. Assuming the motion is second previously recorded, all in favor, please say aye.
Aye.
Motion is carried. The resolution adopted.
Thank you. 43, The Meadows on Seneca, 116 North Meadow Street, City of Ithaca, Tompkins County.
This comprises insurance of a $4.3 million CPC loan for the construction of 70 units, including 35 supportive units and 35 low-income units. OMH will pay full debt service on the insured loan. There's a $5 million HCR supportive housing loan. There's an $8.5 million Homeless Housing Assistance Corporation loan, $12.75 million in federal low-income tax credits, and $3.4 million in state low-income tax credits. ESHI through OMH will provide rent subsidies for 35 units, and there's a 30-year pilot with the Tompkins County IDA.
Thank you. Questions?
The project is being developed by Rehab Support Services, which was founded in 1979 and develops, owns, and operates affordable and supportive housing through upstate New York.
Good. Thanks. Sorry. Thank you.
Okay, now before the SONYMA Mortgage Insurance Committee, a resolution is transmitted in connection with this item. Assuming the motion second previously recorded, all in favor, please say aye.
Aye.
The motion is carried. The resolution is adopted.
Thank you. Item 44, Honeywell Apartments, 906 and 912 East 178th Street, City of New York, Bronx County.
This comprises insurance of a $9.5 million low-income investment fund mortgage for the rehab of 114 units, including 35 formerly homeless units. And it's good to see LIFT because we haven't insured a LIFT loan in quite some time. It's a heavily subsidized project. There's $9.4 million in an HPD year 15 program loan. There's $6.4 million of assumption of existing HPD debt. There are 610 tenant-based vouchers for 47 units, and annual rental assistance of $203 million per annum from New York City HRA. There's a full 420 real estate tax abatement. The project is being developed by Phipps Houses, which is one of the oldest and largest not-for-profit developers of affordable housing in New York City. It has developed and/or preserved more than 10,000 affordable units. The insured loan amount is $85,000 per unit, which equals 34% of the project's total development cost of $248,000 per unit. And the project will break even with a pro forma 11% residential vacancy loss or a 12% increase in operating expenses.
Thank you. Questions?
Now before the Sunny Mae Mortgage Insurance Committee and the Sunny Mae Board, a resolution is transmitted in connection with this item, assuming the motion and second previously recorded. All in favor, please say aye.
Aye.
The motion is carried and the resolution is adopted.
Okay, staying in the Bronx, Van Cortlandt Apartments, 10 Van Cortlandt Avenue East, City of New York, Bronx County. Mike.
This comprises insurance of a $17,120,000 CPC mortgage loan. New York State OMH will pay debt service on $15,920,000 of the $17 million first mortgage, and is $1.2 million component of the mortgage which will be paid by the project's cash flow. It's a heavily subsidized project. New York State OMH will pay annual debt service of $1.2 million a year. There is a $9,550,000 HCR supportive housing program loan. There's a $1.7 million HCR new construction program loan. And OMH will pay $606,000 per annum in annual rent subsidy for 47 units. The insured loan amount is $219,500 per unit, which equals 31% of the project's total development cost of $702,700 per unit. Thank you.
Thank you.
Quick question.
Yeah.
Is the building already all electric or has it been converted?
The Van Cortlandt?
It will be developed as an all-electric building.
Yeah, it's new
Developed
construction.
All electric.
New electric, right?
New
Yes.
construction, yeah.
And they've already tested the area to support it.
To make sure there's enough electrical load, we would require them to get a load
Yes.
letter from the.
Yes.
$1,560 in laundry and revenue when they're using 10-cent machines.
Oh, I think that's just an underwriting standard. I don't
Yeah.
know what that,
Okay.
I don't know what the, I think they just use a, standard underwriting number for that. It would be the same on all the
I was gonna
projects.
say the average cost of the machine is $455 now. All right, we're good.
Okay, thank you. Thanks, Mike.
Now before the Sunny Mae Mortgage Insurance Committee and the Sunny Mae Board, a resolution is transmitted in connection with this item. Assuming the motion and second previously recorded, all in favor, please say aye.
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 The motion is carried. The resolution is adopted.
Thank you, Mike.
Thanks.
Okay, item 41, contract with Paper Alternative Solutions, Inc. for electronic record system solution. Betsy Mallow.
So as I said to the other board members this morning, I just wanted to let you know that we have some bittersweet news, which is that Lisa Pagnosi, our VP of Contracts, is retiring next week. She's actually not here. I would have said she was earlier. Congratulations to her. Sweet for her, bitter for us. The sweet news on our part is that Malini Pons, who is sitting right here, is the new VP for contracts. So she will be the one now that you will see answering most contract questions. Today, though, I have the pleasure of presenting to you a pretty straightforward one, which is a new contract for electronic document storage with Paper Alternative Solutions. We went through a rigorous RFP process to select this new vendor. I don't think you were here when we started, but when we renovated this space, we moved lots of what was in paper files to electronic systems. So this is just asking for approval for a contract with Paper Alternative Solutions for a 5-year period with 2 optional 2-year renewals and 1 optional 1-year renewal. That all adds up to potentially 10 years in an amount not to exceed $2,302,068, a very precise number.
Okay.
But the good news is that it's actually lower rates than we're getting now.
That includes scanning, storage.
This is the storage side of it. Scanning, we have 2 separate.
Estimates for that.
Yeah, and the scanning is going to come to you in next month or the following month. This is just the storage side of it.
Thank you.
This item is before the SONYMA Governance Committee. Resolution transmitted in connection with the item. Assuming the motion second previously recorded, all in favor, please say aye.
Aye.
The motion is carried. The resolution adopted.
Thanks, Betsy. Okay, we have 3 consent items, items 49, 50, and 51. There's no presentation on these items. Will?
Okay, this is before, these items are before the SONYMA Board and the SONYMA Audit Committee. And with respect to item 51, the SONYMA Governance Committee, their resolution is transmitted in connection with the item. Assuming the motion second previously recorded, all in favor, please say aye.
Aye.
The motion is carried. The resolution is adopted.
Okay, items 60 to 67 are information only. There's no presentation. So we need a motion to adjourn.
Assuming the motion second previously recorded, all in favor of adjourning the SONYMA meetings, please say aye.
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 Motion is carried and the meetings are adjourned.
Thank you.
Thank you all very much.